Hey guys, this is Spectre with Allegiant Trading, and I am so excited to talk to you today. Today's class is on scalping. It's just one of several of the educational classes that we provide, and we're constantly adding more to it in Allegiant Trading. The information that I give in this class today is not investment advice, but many of you have come to me and said, Spectre, how do you do it? I want to know your style of trading. I want to know what's going on. A lot of you guys see me posting up my gains, and a lot of you guys have just traded with me. And so you've asked me over and over and over to talk about my style of trading. I have a very unique niche style of trading, and that's what I'll do today. I'm merely sharing my expertise and experience as a cryptocurrency trader. So let's go ahead and talk about scalping. Of course, I'm with Allegiant Trading, the best cryptocurrency community in cryptocurrency. It's a really great community of guys and ladies that are dedicated to cryptocurrency and really dedicated to this craft. Today is going to be scalping alts, specifically scalping alts on Bittrex. That's what I do. This is an introduction to scalping cryptocurrency. So this isn't going to be a 9-10 hour class. You're going to have to know the fundamentals, and we'll get into that a little more in the future to really understand this class. So if you don't really understand trading in general and patterns and different stuff like that, you might want to go ahead and take those classes in the Allegiant library, specifically the charting class by Smart Money and the risk management class by Gang Affiliated, and then come back to this class. Alright, let's talk a little bit real quick about Allegiant and who we are. Allegiant at the core is a community of professional cryptocurrency traders. In this community, anybody with desire, determination, and dedication can grow. That's the truth. We seek to develop our members through training, community, and communication of the most important news, trading techniques, and information in cryptocurrency. We foster an inclusive culture that is accepting of all traders, no matter your skill level. This culture is dedicated to cultivating personal and team development. As our traders grow personally, their wealth grows, and the community grows, and that's really exciting. We're all about guts, glory, and gains. This is Allegiant Trading, and we're the #1 cryptocurrency community. You know, Allegiant didn't pay me to say that. I really believe it at my core. It's a great community. There are no trolls. There are no pump and dumps. There's no craziness. It's just professional traders that are sharing information, that are helping each other grow, and that are really, really cool to work with. Allegiant's definitely helped my trading career, and I definitely wouldn't be where I am today without their help. A couple of guys that have helped me, and ladies, the Allegiant group in general, the Allegiant family, everybody there has been awesome. Specifically DJ Nasty, Smart Money, M. Dilly, Dreamer, KP, Crom, or Greg as we call him, Shootin' Shredder, Mr. Senior, Dr. Crypto, and Gang Affiliated. Those guys have really helped me along my trading journey, and I really appreciate their help. They've changed my life, honestly, as cryptocurrency has changed my life. My name is Spectre, or my real name is Ben. I'm a profitable scalper mod at Allegiant Trades, and I'm a founding member. My calls go anywhere from 1 to 300% within hours to days. I post those calls all the time in the watch list in Allegiant Trading. I just paid off my car due to scalping and trading, so it's been really profitable to me. I'm all about growing my Bitcoin, so that's not just Bitcoin going up in value. That's me actively trading and growing my account. I share a lot of my trades with our community, and my account is peer-reviewed with our admins, so they see my account growing and they know my success. They track it. Since August 2017, I've spent about 1,500 hours dedicated to cryptocurrency. So it's safe to say that I spend a lot of time dedicated in cryptocurrency. I average 30 to 50, sometimes 60 or 70 hours a week trading, educating, and researching cryptocurrency and blockchain technologies. I spend countless hours working with the community at Allegiant to try to help new and aspiring traders. And that's something I really love to do because when I was trading, there were so many people that helped me and reached out and were so nice. And so I want to pay that back. A big request here, obviously this class is free, but I do ask everybody, if you don't mind, to follow me on Twitter. My Twitter name is at Spectre, and there you can find helpful videos, signals, fundamental alerts, news, interviews, and more. And in the future, I'm going to be getting more into interviews over Twitch and over different channels and stuff, and so that's really exciting. So please follow me at Spectre on Twitter, and that's a great way to say thank you for me making this video, if you enjoy it. Let's talk about the topics. So the topics that we're going to do today, we're going to talk about trading tips, which are good for scalpers or anyone in general. Scalping defined, scalping by the numbers, scalping psychology, because psychology actually plays a big role in scalping, and scalping setup. That means like what hardware I use to scalp. Scalping death traps. These are bad situations you can get into in scalping. Scalping target. Setting your target. So finding what you're going to scalp. Scalping entry. That's an important part. You got to know where to get in on the coin or where to get in on the price move. Scalping size. So how big's your size that you're using to trade on? That's super important because if you use too much, you can get in hot water. And then obviously your scalping exit. You got to know where the door is and when to leave the party. Number 11, scalping questions and answers. Here's one thing that I want to say. Everything that everybody wants to know is this last part. But let me tell you something right now. If you fast forward through this video and just skip to the end, you are going to miss some critical things. Actually, everything in 1 through 6 is absolutely critical to scalping. You may think, oh, that's just a fluffy stuff. No. If you don't understand the numbers, if you don't understand the psychology of scalping, if you don't understand the potential pitfalls, then you could have all of this other stuff that you think is the meat and potatoes down to a science, and you still fail. Scalping is so details oriented. You have to have the details, and these first 6 things are all about details, and it's just great hardcore trading information in general. So please stick with me through these 6. Please don't fast forward. It will actually pay off for you, I promise. Alright, let's get started. Number 1, great trading tips. Number 1, paper trading. This is the best tip that anybody could ever tell you. Recognize the exponential impact of your poor choices due to Bitcoin's overall skyrocketing price. If you look at 5-year chart of Bitcoin, it's gone up in price, period, point blank. Today's $10 mistake in scalping or trading in general can actually reflect a $100 loss in a year. This matters. So think about that for a second. If you make a mistake today, and you're like, well, this only cost me $10, it's all good. Well, if Bitcoin goes up in price in a year, as it is set to, or in 2 years, and it keeps going up in price, think about it. That $10 mistake that you blew off could actually be a lot more expensive. So it's important that you're making the right decisions and that you have informed trade. And how do you do that? You do that through technical analysis and fundamental analysis, TA and FA. If you cannot be a success at paper trading, you won't be successful when your money's in the mix. Money being on the line affects your psychology, and that heightens your stress factor, which is not great for your trading. Obviously, paper trading, for everybody that's new to trading and doesn't understand it, paper trading basically means you're trading with monopoly money. That means you're writing down your trades, what you entered at, what the price was at, and then what you hypothetically sold at. And then you're calculating the profit, how much you made from that trade. That's paper trading. You're just writing your trades down instead of actually trading on an exchange. Next tip, spectators, go home. Trading shouldn't be a spectator sport. Are you having friends over, want to show them how you're scalping legend? Have you told them fish stories about how much money you're making scalping or trading? That ends badly. It's a bad movie, and I've seen it over and over. In fact, when I was a new trader, I did this. I had friends over, and I was like, watch how fast I can make money. It's awful. It's a train wreck. So definitely don't do this. When you trade in front of people, your psychology changes. You're under pressure to perform, whether the market is conducive or not. This is a great way to lose money and look like a fool in front of your friends, and that's no good. Nobody wants to do that. So paper trade at the beginning until you're consistently making money, and then don't trade in front of people. Another thing, don't trade on your phone. And here's why. One, you're entrusting your entire account to this 2.5 inch by 6 inch screen, which is a bad idea. Go home, trade on your computer, do it professionally, block everything out, get everything quiet in your office room or study or wherever you trade, and be serious about it. Another thing is, don't give your private keys to any third parties. There are tons of third-party trading apps that want you to give them your private keys, and you can trade through them. And that's true, you can trade through them. But this is a disaster waiting to happen. By giving them your private keys, you're basically handing them your money. This is cryptocurrency, and if they walk away with that money, the likelihood of you getting it back is slim to none. So don't give third-party apps your keys. Don't give them access to your account. Don't do it. Don't trade through apps. Next. A couple more tips. One, do your own homework. Take the Allegiant classes. And, you know what, in YouTube in general, there's tons of great information out there. You have to just look for it. And Allegiant specifically has an incredible class on how to preserve your profit. And this class is on proper risk management. It's taught by a guy named Gang Affiliated, and he's a great guy I've been trading with a long time. This class is absolutely essential. Absolutely. Whether you're a scalper, a swing trader, you're just holding stuff long, it doesn't matter really. It's absolutely essential. It's a great class and you need to take it. Take every other class that we offer. Educate yourself. You cannot build a scalping career if you don't know the basics. Again, everybody read that. Because a lot of people come into trading and oddly enough, they think that scalping's like their first stop. That's the first place to go. Actually, if you don't know the basics of technical analysis, you shouldn't be scalping. It's like trying to build a house without laying the foundation of concrete, and that just won't work. Next. Develop a strategy. Be a niche trader. I think niche traders are great. That's one thing that I did. Focus on one style of trading and perfect it. I focused my energy on one style of trading, aka scalping, and it paid off. Even when the market wasn't profitable for my style, I would just use that time to educate myself until opportunity knocked and I knew it was a good scalping day. Every day is not going to be good for scalping. I refused to pursue things that weren't my focus. I believe this helped me greatly. Singularity is a powerful force. Think about that, guys. When you focus on one thing by itself and nothing else, you're an incredible force. But I see tons of new traders getting into trading, and they're looking at this blog and that blog and 10 subreddits and all of this other stuff, and they're overwhelmed. Just focus on one style of trading. Find one style that's true to you and true to your personality and that you enjoy, and really dig into it. So when I was trading, people tried to get me into Bittrex. I said no. People tried to get me to short alts on Polo. I said no. People tried to get me to sell into USDT. I actually did that twice, and I got burned. So I stopped doing that. And then people tried to get me to do alts, hold them long. Oh, this is the way you can make so much money, Spec. I said no. You know why? Because I was focused on one thing. I wanted to get good at that one thing, and that one thing was scalping. I wanted to get good at it and study it so much and learn the patterns and learn everything associated with it. So at least, even if I don't understand 90% of the world of trading, I could get good at this one part and become excellent at it. I wanted to be a specialist, and that's what I've become, and it's worked out really great for me. So I would recommend that for new traders. Find your strategy, find what type of trading you're attracted to, and rip it apart. Study it. Study the ins and outs of it and become an expert. Next thing is, and that plays right into this plays right into that, budget your time and money. Every day when I started trading, I knew that 60% of my day was going to be spent on education, whatever time, whether I could spend an hour on crypto that day or 12 hours. 60% of it I was going to spend on education, researching cryptocurrency, the blockchain, trading patterns, techniques, and language. 20% was going to be spent on researching fundamental coins, the technology, the teams behind them. So these two kind of go together. 80% of my day overall was spent on researching. And then 20% was actually learning the exchanges, which I singularly focused on one exchange, and that was Bittrex. So 20% was learning Bittrex and learning to make paper trades. I did not spend a ton of time on making paper trades because I knew I had no clue what I was doing and I had no clue what trading really was. Okay? As you learn more, you can slowly divert more time into trading, but at the beginning, most, if not all your time should be spent on education. It takes 10,000 hours. 10,000 hours to become an expert at anything. So that emphasizes the critical nature of educating yourself at the beginning. I promise you, trading is massive. There's so much that even I don't know about trading, even at this point. So it really takes a lot of time and energy to study and become an expert. But you got to budget your time. And you can't rush ahead and start jumping into trading when you really haven't done your homework. It's just going to burn you. Next, budget your money. So eventually you'll start winning money, you'll start getting money, you'll start trading and making successful trades. Never spend more money than you're willing to lose in any investment. Real estate, trading, crypto, whatever it is, don't do it. Crypto in general, when you get profits, plan how you'll use them. Where will you store them? What's your long-term goal? You shouldn't store all your crypto on the exchange. That's a bad idea. One of the things that we recommend is cold storage. I specifically use the Ledger Nano wallet. I'm not getting paid. They're not paying me an endorsement to say this. It's a great little wallet for storing your crypto, and it's the safest way to store your cryptocurrency because it's offline. If you haven't invested in a cold storage device, you should, especially if you have any considerable amount of cash on the exchange or involved in crypto. The best part is it only takes about 15 seconds to 15 minutes max to transfer your Bitcoin or crypto back to the exchange. And the cool thing is these Ledger Wallet Nanos and a lot of the other cold storage devices, they're really just fancy USB devices. You don't just have to store Bitcoin on them, you can store different currencies, cryptocurrencies on them. So that's a good thing. The next thing I would talk about, and the next tip I would give that's good for scalping and really trading in general, is be balanced. Practice emotional neutrality, positivity, tranquility, music. I use music, but I play the same music when I trade over and over and over. And the reason why is I know what that music does to me. I know the psychological effect it does to me. And I'm practicing playing that music to get me in the same repeated state every time. Because every time I want to trade, I want to be as close to a machine as possible. Because there's already enough change and flux on the coins. So I don't need myself to be a basket of emotions. I want to be positive. I want to be tranquil. I want to be calm. I want to be coherent and really focused. Another thing, and I really shouldn't have to say this, but I'm going to. I seriously discourage drinking when you're trading. I think that's a awful idea, especially for newer traders, and that's my beer I'm drawing here. But especially for newer traders, it's an awful idea. Because you just can't think clearly and really make clear decisions, obviously. So I really shouldn't have to say that because most people should know that. So please don't do that, and I'll draw some. These are my bubbles on the beer. All right, next, don't trade on tilt. Control your environment. Understand what tilt is. Tilt is basically where you're not yourself. You're just in a bad mood. You're in a funk, whatever. Understand what causes it and how you can stop yourself from trading on tilt. It never ends well. If you can't control your environment, you cannot control your trades. That's so true, and remember it. One thing, well, I'll tell a quick story here. Not too long ago, a couple months ago, I moved, and I got into my new place, and I was following my same trading rules. I was doing my same trading strategy, but all of a sudden, it wasn't working. I was actually losing money, and I couldn't figure out why, and it wasn't the environment. It had nothing to do with trading. It wasn't the environment in the market, but it had nothing to do with trading. And all of a sudden, I realized, like, what the heck is going on? Why do I just keep losing? And so I asked one of my trading buddies. I said, "What is going on?" And I kind of talked to him a little bit, and he's like, "It's the move for sure." And I was like, "No way! That's hocus pocus. You move somewhere, so you're just kind of not yourself. Don't have." And no, absolutely. Sure enough, I moved, And when I did, it kind of put me on tilt. I was overwhelmed in the new space. I wasn't comfortable. I was thinking about all kinds of stuff, and I really wasn't there as far as, like, just balancing myself. And so, my friend recommended I take a week, 2 weeks off. And I did take that week, 2 weeks off, and it was honestly one of the best things for my recent trading career ever. Not only do you miss trading while you're gone, but also it just kind of lets you take a break and take a breather and kind of get your personal life and things together. So if I would have traded through that time and forced myself to trade, even though I had a lot of personal and things on my mind, it would have been a bad thing. So I definitely recommend, if you just broken up with someone you're in a relationship with, or maybe, someone close to you has gotten sick, taken ill, or anything really affects your psychology, just take a break from trading. Take a breather, stop, just, take a week or two and really find yourself, and then come back once everything's settled down and rock and roll. But if you do trade through those periods where you're not really yourself, and you don't have 100% of your focus and mental clarity, you can lose some money, especially in scalping, because scalping is such a non-forgiving game. You really don't have the extra mental capital to devote towards other things. You have to be 100% focused when you scalp. I made this, and I think it's hilarious. I don't always trade emotionally, but when I do, I lose tons of money. And dude, it's so true, and this meme is perfect for it, so I thought I'd share. Next thing that I definitely recommend is track your progress. So you can't see, or seeing where you've been is critical to getting where you want to go. Remember that, seeing where you've been, and this is in life in general, seeing where you've been is critical to getting where you want to go. You got to know where you came from to really, really know where you're going. So keep a trading and a scalping journal. It's a great thing to do. Here are a few things that you should track. Track your buys and sells, what coin you buy, and when. Track and identify why you entered the trade. Was it based on technical information, fundamental, FOMO? Be honest with yourself. Write down what you learned from bad trades. Write down how you'll change or adapt to avoid similar mistakes. One person asked me this. Where do you find this information? That's easy. Every time you buy a coin, say on Bittrex, at the bottom of that page, it will list your purchases, the time you purchase, the amount you purchase, and what price you paid for them. It'll list all of that at the bottom of the coin page on Bittrex. So just go down there and copy and paste that stuff. Me personally, I use Excel. So I use Excel and I import all that information into Excel manually. But I'm pretty sure in Bittrex you can export this type of data. But if you can't, just be committed. Copy and paste those values into your Excel spreadsheet. And, this may take 5 minutes a day, but it's a great thing to do. It's a great thing to do. If you want to be a super trader, write down your mental state before you start trading every day. Kind of keep a psychological journal of how you, what mood and where you're at as far as trading. Are you upset? Are you happy? Stressed? Balanced? And then at the end of the day, write down how you did in trading and how you feel your psychology affected you. This is important, especially, they say 50% of the population is driven by numbers, and then the other percent is driven by emotion. And driven by their heart. So some people think with their head, some people think with their heart. If you think with your heart, you better be tracking your psychology and how it affects your trading. I can't overemphasize this. It's important. If you don't track your numbers, what you're buying and selling, how you're doing, whether that trade was a successful trade, why you entered the trade, you have no way of knowing if your strategy is working. And especially early on in your career, if you don't know that a strategy is failing, you can wreck your account, because think about it, you're early in your career, so you probably don't have a lot of money in that account. So you got to know as soon as a career is not working, and you got to make changes, adapt, and overcome. Make your trading rules. Write them down. Watch the risk management class. Come up with your rules for your account and follow them. If you don't write them down, they're subject to your interpretation in the moment. You're like, well, this is a really great opportunity, and that's why I'm going to use all my account. No, no, no. That's a great way to get yourself in trouble. So write your rules down and then follow them. Next, community is key, and this is another shameless plug for Allegiant because it's true. You got to be part of a strong professional community that helps stay true. Helps keep you true to your goals. Being part of a great community also helps you stay educated and up to date with what's happening. It helps you stay inspired, stay motivated, and stay focused. I don't know how many times I've come in and I've taken a big L, I've taken a big loss, and the guys at Allegiant cheer me up, get me going, help me identify what I did wrong, and that's what community is all about. So there's a bond there that we're helping each other, and we want each other to succeed. And now I'd like to talk about a couple things to avoid in scalping and trading in general. First of all, avoid pump and dumps. They're awful. Great way to lose your money. Avoid paid Telegram groups. Avoid sending your Bitcoin to anyone. Avoid sending your Bitcoin to anyone for signals or pumps. Why not just learn how to trade so you don't have to pay for food all the time? You can now hunt and kill and eat on your own. That's what Allegiant's all about. That's what Spectre's all about. That's what I'm trying to teach you guys to do. Avoid wolf packs. What I've noticed of these, they're usually dump on the wolf pups groups, meaning everybody that comes in, they are going to pre-buy the coin or whatever they're telling you to buy, and then they're going to dump on you, which you're the wolf pups if you're in a wolf pack. Avoid FOMO. Avoid buying without technical analysis. If you don't know why you're buying something and you don't know why the price is moving, you are FOMOing. You are fear of missing out. You see that price moving and you're like, I've got to do this. That's a horrible way to trade. You're basically gambling. If you haven't done your homework, meaning you haven't taken risk management, you haven't taken charting with smart money and Allegiant library, you haven't found videos on this stuff and researched it, just stop. Stop trading. Stop throwing your money away, because I can guarantee you're throwing your hard-earned money away. Stop and do your research. Next, spoofed books. Avoid them. And we're going to talk about this a little more in the future. Spoofed books or ghost orders. Unless you understand what's happening and can play it to your advantage. Next, avoid trading with your rent money. It's great information, and unfortunately some people need to be told that. Next, trading with other people's money. Everybody I know that's new in cryptocurrency, somehow they want to start a brokerage, the big B. That's a bad idea. You know nothing about trading, and you really shouldn't be using other people's money to trade. You should use your own money and lose that money. Now, if you're incredibly successful in 5 to 10 years, do the right things, get the right certifications, and open a brokerage. But for right now, it's only a great way to ruin relationships. Now, you could make them money, and, I know a lot of people that trade for other people and have made them money, but I also know a lot of people that have absolutely wrecked other people's money and absolutely wrecked that relationship. There is no relationship where they're going to hand you Bitcoin that's worth $30,000 and Bitcoin tomorrow is going to drop to $15,000, where they're not going to pick up the phone and be like, what the hell? What did you sell me? What's going on? So you don't want that responsibility. And not only that, the crypto market is too fluctuative. So you don't want the responsibility, even if Bitcoin resumes the next day and goes to 60K. I promise you don't want the stress of today having to tell them why it's at 15K. And that's a horrible situation. You need to focus as a new trader on learning trading, not on explaining to other people how you didn't see it coming. Next, when you're trading on an exchange of choice and it's overwhelmed, meaning the order books black out, the prices black out, the high day, the volume, all that stuff blacks out, stop. Just stop. Don't trade. Don't enter a trade, because you're eventually going to lose big money. Just stop. Unfortunately, that's something we're dealing with because of the exponential influx in cryptocurrency of new users. Everything from Coinbase to Bittrex to Binance, they're all overwhelmed. So when you recognize you're in a peak time and those things are getting laggy, just stop. Don't lose the money. It's not worth it. Okay. Next. This is a little goofy. It's a little fun, but it really happened to me. True story. Don't forget the weather. So I've been trading. I live in Florida. It's the lightning strike capital of the world, and so sometimes we get the power knocked out here. Um, so if you're trading, I would recommend getting a battery backup. Another thing, when you're scalping or trading, close all the programs on your computer that's not associated with the trade. You can't risk for your computer to lock up. You can't risk for the possibility that something will conflict with trading and you lose money. You don't want to lose money, so these are great ways to not do that. And we're about to get into technical trading, but like I said, this stuff is just as important. All right, next thing, I thought this was hilarious. This is a comparison between what's called a virgin cryptocurrency investor, but let's say a scalper. This is honestly a scalper. Scalper. There we go. So the scalper draws triangles and lines after every loss to make himself feel better. Oh, that's why I lost money. Acts on every new altcoin rumor for short-term gains. Doesn't hold much Bitcoin or Ethereum because he thinks those are beneath him. Checks Blockfolio every 5 minutes. Buys the peak and immediately panic sells. He buys there and panic sells when it dips. Constantly reads 10 different crypto subreddits despite 10,000 posts about hardware wallet. Remember the Ledger Nano that you've already written off and said, I don't need that. Yeah, he did that too, and he got hacked and lost his Bitcoin. So buy cold storage. It's great. It's a good thing to do. Still, it feels pretty good. It still feels pretty good about his 4,000% gains over the past year. Now, this guy got his 4,000% gains because the king, the almighty Bitcoin, has gone up in price. Now, let's look at Chad Satoshi. Chad Satoshi doesn't even know what technical analysis means, doesn't read any crypto news, only invests in big alpha coins like Bitcoin and Ethereum, blindly throws in a few $100 every month, and then checks CoinMarketCap to see how his investment's doing. Doesn't know what HODL is or hold on for dear life, and hasn't sold any of his positions in 2 years. And boom, he's posting 2,000% gains. I see this happen all the time. You know why? There's 2 reasons. One, the wannabe scalper is not doing his homework. He's not taking classes like this. He's fast-forwarding through classes like this to get to the entry, the exit, the sizing part. He's not listening to everything at the beginning of this class. And another reason, so this guy's not doing his homework. He's not watching risk management classes. And another reason why is he is overtrading. He's making way too many trades based on poor or weak technical information, and they don't result in the profits that he needs, or they result in losses. So he's not basically reserving his money for the best opportunities. I like to think of my money as little soldiers, and I got this analysis from Kevin O'Leary on Shark Tank. I like to think of my money as little soldiers. I want to send these soldiers out to fight the best battles possible. I know they've got to go out and fight battles, and hopefully they bring home loot, but this is an explosion. But I want to send these to the battles where they've got the best chance to perform, the best chance to conquer, and bring me home loot, bring me home money. So my money is soldiers. When you don't do your research and you don't do your studies and you're not prepared, you're sending those soldiers into a battle that you know nothing about. So a lot of times wannabe scalpers and or new traders just lose tons of money that they could have had by overtrading and not doing their homework. Even though a lot of those traders either break even or make money because Bitcoin's rocketing up in price. So it's kind of like a saving grace that Bitcoin's going up. But the sad thing is they're slowly losing more and more and more of their Bitcoin. But because Bitcoin's going up in price, they still manage to break even or have a little bit more. Now, Chad Satoshi, he's put no thought into what he's doing. He just bought some Bitcoin and held on, and it went up. And he's going to make, in the end, tons more money than the wannabe scalper because he just bought and hold. And he's not trading at all. There's one buy, and then eventually there's one sell. Now, where this could flip around is if the scalper here, if he actually did his homework, realized what are good investments, realized technical fundamental analysis, understood these concepts, and got good at them, he can continue making a lot of trades, but only trade them in the best ones and actually make tons of money. And in that case, he would decimate Chad Satoshi as far as his returns. Alright, next. Scalping defined. Alright, now we're starting to get into scalping, the subset. What we came for. This is the meat and potatoes. This is what everybody wants to see. And I'm excited to do it. Okay, scalping. Scalping, many of the concepts in this presentation are merely introductions. Many of these slides are topics in and of themselves and as such could be discussed for much longer time than we have today. It's my hope that members of the cryptocurrency community and Allegiant will use this as motivation to further their research on these topics and deepen their knowledge of trading and scalping. One of the things I want to say is I know for a fact that people from all over the world are listening to this, and I'm really, really thankful that they would want to hear from what I have to say. I know my friend George from Russia is listening, and I want to make sure I slow down. I'm naturally a fast talker, but I'm going to try to slow down and make sure to keep cognizant of that throughout the rest of the presentation. Slow down and make sure they can really understand, because I know a lot of them, English isn't their first language, but I'm just so thankful that they took the time and are here with us today. So let's go ahead and move forward. What is scalping? Scalping is taking a small, high-frequency trade strategy and profits on a general price trend, while limiting exposure to reversals by exiting before key resistance levels, key fib levels, and key sell walls, all while the trend has strong momentum. So what does that mean? Well, I'm going to explain what it means on future slides. So we're going to dive into this. But that is the technical definition that I put on scalping. Most scalping trades last less than 30 minutes. Most scalping trades last less than 3 minutes. A majority of my scalps last less than 30 seconds. Time when you're scalping is absolutely essential. As is focus, and 1 second of distraction in scalping, let's be honest, you will lose. You'll absolutely lose your shirt because you're monitoring so many things, and it's that simple. So in scalping, time is of the essence, and focus. You got to have those two things. If you don't, you're not going to be able to be a good scalper. All right. Risk of scalping. The biggest risk to scalpers is that the price goes against their position and they lose money. If you set your stop loss too tight, then you may stop out of trades that are initially unprofitable, but which might recover and post awesome gains if you had not been stopped out. However, if you set your stop loss too loose, the risk is that the reward ratio is very risk-reward ratio is very low, meaning a single loss-making trade could eradicate all the profit from a large number of smaller profitable trades. So how do we deal with this? Well, we're going to conquer that in the next couple slides. The reward of scalping. The reward of scalping, obviously, is that small wins obviously add up to bigger wins and bigger accounts. When you got a bigger account, you can still use a small percentage, meaning you're doing your risk management of your account, and be making substantial money. If you follow good scalping practices and if you wait for the market instead of trying to make or force the market, meaning if it's not a good scalping day, if you don't see the right conditions, you don't scalp. Go educate yourself, read a book on trading, there's all kinds of productive things you can do related to scalping that doesn't involve you trading. You can make substantial money from scalping, but you got to know when to hold them and when to fold them. And we'll get into that more in the future. Alright, let's talk about the 3 types of scalping real quick. First of all, you have macro scalping. This is high risk. This is using large amounts of money for small moves, but there's a bigger risk to reward ratio. You use large money on high frequency trades, but the weight of your decision is huge, meaning you buy more, but you risk more, and your decisions have to be correct much more often. If you're using a larger amount of your account to scalp, you should still be doing it within the bounds of the risk management class that Allegiant has, that Gang Affiliated taught, that's on our Twitch channel. But if you're using a larger amount, that means you can lose money faster too. That means if you're using a larger amount, you can only pick the scalping options that are the absolute best. Because you have to win. You have to win, because when you do take a L, it's going to be pretty decent money. So you have to only choose great options. I only macro scalp. Read this, guys. I only macro scalp when the conditions are legendarily optimal. This may occur once a month or possibly once a week, but has everything to do with all the forces aligning. Everything has to align. So an example of this recently was XLM and XRP. They both went on like a 3 or 4 day rampage where it was just nothing but bullish. And I looked at those charts, and to me, they said, this is a macro scalp. This could happen. I could put a little bit bigger chunk. Now, I'm not talking about draining my whole account into something. Of course not. We're not going to break our risk management. But what I'm saying is, if my average trade is, and it is, 1/30th of my scalp account, then for these trades, for these overwhelmingly bullish trades, I might use I might use 1/10, which is a lot more than I normally use. But everything has to align. The forces have to align. Side note, my scalp account is about 30% of my entire crypto holdings. So if I have 0.3 Bitcoin, hypothetically speaking, in my scalp account, that means I have 1 Bitcoin altogether. Now, obviously, 0.7 of my Bitcoin is in another account, and I believe in doing that, segregating your accounts. But what I would do is, because personally, I would put that 0.7 on your cold storage device. So it would be stored offline in a cold storage device. And that's my personal rule. What I do is I operate with 0.3 in my scalp account, and anytime I get over 0.4, when I get to 0.4 and I've scalped and I'm making money, which I'm very close to it right now, what I do is I transfer 0.1 over to my cold storage. So I transfer 0.1 of Bitcoin over there. That way, what happens is it keeps my scalp account to where I want it. This is my personal rule. My scalp account has 0.3 in it. And that's another thing, is that's a good way of limiting yourself so you're never tempted to scalp and use bigger money than you should. One thing about the psychology, and we'll talk about this in a second, one of the things about the psychology of scalping is as you win more and you have these small wins, you're like, wow, I could do this with bigger money. Well, I could have just made $200 or $500 there. Wow. And so it starts kind of getting into your head. Well, by limiting, and you can make some bad choices, by limiting how much you have in your scalp account, it's a great way to make sure you don't end up risking your whole account or half of your account on something and losing catastrophically and basically wanting to quit scalping and wanting to quit trading in general. Alright, next, micro scalping. Micro scalping is this: if the price of erasers are 10 cents and I buy 7 erasers costing a total of 70 cents, the price of erasers goes up 3 cents. Therefore, each eraser is worth 13 cents. I now have 91 cents, because 10 times 13 is, I think, 91. That should be right. Point is you've made 21 cents. You made a little bit. If you had bought 1,000 erasers for $100, you would now have made $30 instead of 21 cents. This is macro scalping. You are using more money to buy more of the shares and hopefully make more money. But you have to be right. There's a lot more psychological pressure when you're macro scalping and you're using bigger money. Psychological pressure is not good for your trades. So you have to think about that. That's one of the risks with macro scalping. Micro scalping is less dangerous, and it's the scalping that I do most often. Even then, micro scalping without proper TA and FA can go bad. In micro scalping, you use a smaller amount. You do high frequency trading, meaning you're buying and selling quite often. But the gravity of your decisions is a lot lower than using the big money of macro scalping. In micro scalping, you make less money per trade, and so it takes you longer to grow your account. However, you can exponentially reduce the amount of danger or risk that you bring to your account by limiting your exposure to the market and limiting the amount of money that you expose to the market. Never engage in more than one macro scalp or one micro scalp simultaneously. That's my personal advice. I never engage in more than one scalp simultaneously. Now, I may add to my scalping position, and I'll talk about that in a second, but I don't do more than one at one time. Then you have what I call gambling or lotto plays, and this is basically what a lot of new traders do when they think they are scalping. Gambling and lotto plays means you have no real fundamental information about what you're doing, no technical information about the coin or the chart. You may not even look at the chart. You just see something moving and you see the price going up, so you buy it. Tons of new traders are doing this, and it's just a side effect of having tons of new traders in cryptocurrency in general. If you're scalping without a good understanding of trading, you're gambling. So if you want to be successful and make a lot of money in the end, you really want to be doing one of the two of these, or like me, you want to combine them together and do this. I do this 99% of the time, and then every now and then I break off a macro trade on something that the literally stars align, and it's perfect. Okay, another thing that I would say is that the goal in scalping is to come in and out before anyone even knows you're there. You're essentially a cat burglar in scalps. You're quiet, you're fast, and you need to make a small footprint, literally. The more noise you make coming into and out of trades, the more bags you may take. And what does that mean? That means the bigger amount of money you use, when people see that on the order book, they know what's happening. They know big buys or big sells are occurring. So the more units you're purchasing and the more amount of money you're using, the harder it is to get in and out of positions. Whereas if you're only purchasing a smaller amount that's around the average purchase order on the tape at that time, it's easy to get in and out of those positions. And I'll explain a little more about this in one of my further slides. But just remember that. Remember the burglar. It makes it means nothing if you break into a house and you find the most valuable jewels in the world in that house, but you cannot get out of the house with the jewels. So you take a loss. You take a massive loss. You go to jail, like all burglars should. But think about it from a scalping perspective. If you get the best buy ever on a coin, and you're like, oh, I got this for a great price, it's going to rocket up, and sure enough, 2 minutes later, it rockets up. But it only maintains that new price for so long, and you bought too much when it was cheap. So now you can't exit it. And now it drops in price, and it drops past your entry. You bought it here. It did go up to here like you thought, but then it came back down to here. So what happened is you bought 10 of them, and you were only able to sell 5 up here, and you were able to sell 1 here and 1 here, and that's 7, but then you sold 3 down here, so you actually lost money, and nobody wants to lose money. So you got to be a cat burglar, fast, quiet, and a small footprint. Literally, the more noise you make, the bigger bags you may take. Alright, we'll talk about that a little more in the future. Alright, next. Scalping by the numbers, section 3. Scalping by the numbers. Scalpers are ambush predators. That's why you see a lot of wolves on this presentation. We're ambush predators. 90% of scalping is preparation. This is the non-glamorous, non-sexy part of scalping. It's researching fundamental news, technical analysis, searching for buzz, watching top gainers, crawling Twitter, watching newsmakers, finding breakout points on charts, and waiting for those moments to come. So when they do come, boom, we can attack. Attack. And there's my big exclamation point, attack. And then the 10% is the actual fun part where we attack stuff. We pull the trigger, we make money. I can't say how many times I've been in Allegiant. We'll be in voice and we'll literally talk for hours on end. And then all of a sudden, finally, after 2 or 3 hours of watching something, it comes time to attack it, and me and Dreamer and KP and whoever's scalping alts with me at that time on my team will get so excited because it's money making time. So that's fun. Um, so those are the numbers. Next, let's talk about the scalper's mission. What we're doing here. We're actually, instead of buying down here, I'm going to use yellow because I think people will be able to see it a little more. So instead of buying down here like most buy and holders would and selling up here, scalper is basically essentially trying to buy here and then sell right here. And then when this reverses, they'll buy again probably somewhere around here and sell again up here. And then when this reverses, we'll buy again here and sell again up here. So what we've done is we've got a run right here, a run right here, and then we've got this run right here. Now, you're not always going to time these bottoms perfectly and enter right here and then sell up here perfectly at the top of the wave. You may sell right here. You may buy right here. Remember, it's always better to take off a little bit smaller piece of the pie than it is to take off too big and it reverse on you, and now you're in the bad country. So it's always better to wait until it's confirmed bullish, this run, and it's going up pretty strong and that volume's coming in, and then take out a smaller piece of pie than trying to nail it here, and it's like, uh-oh, that wasn't actually the bottom of this wave dip. Another thing that we're looking at here as scalpers, as far as this chart right now, is we're looking at volume. We're looking at these candles right here. We're also looking at this green line right here, the 200 EMA. This coin's obviously broken above it. Now, this is on a 1 minute, but it still matters. Another thing that we do is, as scalpers, we're using 1 through 5 minute charts. I'm not going outside of that. In fact, I'm glued as a scalper to the 1 minute chart. That's what I scalp on, period, point blank, in the story. And as a scalper, I look at those 1 to 5 minute charts, but before I go into a coin, before I start trying to scalp into it, I go and I pull back and I look at the 1 hour, I look at the 1 hour, I look at the 1 day, and I look at those 1 week charts, and I see where I'm at, where I'm scalping at. Scalping on a 1 minute chart, if you haven't looked at the bigger time frames, it's like building a garden on what could be the edge of a cliff. Because you don't know if that coin's on a 1 day rampage where it's been on a 1 day chart rampage where it's been rampages for 6 days, and say you're macro scalping. God, and you definitely shouldn't macro scalp without pulling back and looking at the overall time charts. But say you're macro scalping, so you've got a little bit bigger money. Say you've got, let's say $300, and you enter the trade, let's say right here. This is a great place. Say right here, it just turns and it dumps on you, and it's just a catastrophic dump. Look, this kind of looks like a head and shoulders right here forming up. So this is the shoulder, and it dumps. Head and shoulders, a trend reversal pattern. Again, you guys got to know your patterns and be able to look at these things in 2 seconds, say, boom, that's that, that's that. So let's say this is a head and shoulders pattern, and you bought with your macro scalp here. Look, it's been going up. It's in an overall bullish trend. This is a great one. And so you buy right here, and actually this is a head and shoulders, and it reverses on you, and it dumps. Think about it. There might have been a prophecy. There might have been a foretelling. There might have been an indicator that it was going to do this. If you looked at that 1 day chart, if you looked at that 1 hour chart, if you looked at that 1 week chart, and the RSI, which is this thing down here, if that RSI is way up here on a 1 day chart, way up high or at 100, and that thing's overheated, it's got to pull back. It's got to pull back. Yes, on breakouts, coins do defy RSI, but most of the time, when it gets way high up here and it gets over that 70 line or whatnot, it's going to come back. So you got to look at those bigger time intervals, and you got to say, what's the overall trend of this chart? What's it done in the past couple days? What's it done in the past week? Am I at the beginning of a breakout? That would be a great place to scalp, at the beginning of a confirmed breakout on a 1 day or whatnot chart. And just find out, because you're looking through a microscope on the 1 minute chart. You got to pull out of that microscope, look at the bigger charts, and find out what area, what environment you're operating in. It's kind of like looking through binoculars. That's what you're doing when you're looking at a 1 minute chart. Every now and then, you better take those binoculars off and look around you and see where you're at. So say this, you entered here with a macro scalp and you had, let's say, $300, and it just dumped furiously. If you looked at those 1 day, if you looked at those 1 hour charts and saw the RSI way too high, it would have probably been a great indicator that this could turn bad, turn ugly at any time. Now, I still scalp these things, but I affect my sizing based on what's going on those larger time interval frames. Remember, things on the 1 day, on the 1 hour chart mean a lot more, hold a lot more weight and gravity than changes on the 1 minute chart. So they hold more gravity. A head and shoulders on a 1 day chart is absolutely a big deal. Whereas a head and shoulders on a 1 minute chart might not be that big of a deal. It's probably going to pull back, but it might not be catastrophic or a large pullback. The 1 day chart, head and shoulders, yeah, you're looking at losing some value there. So you have to take all this into account. If scalping was easy, as a lot of news traders think it is, everyone would be doing it and everyone would be successful. The main requirement that most people lack for successfully scalping is patience and discipline. Okay, so when I'm scalping, and we're kind of on this chart, so I'll talk about it a little more. There's a couple things that I do. First of all, here's my secret indicators, okay? They're not secret. And I'm not going to teach you guys how to use these indicators. You have to take the charting class with Smart Money to learn that. But I use Bollinger Bands. Mine are set on 20 close too. I run a 9 EMA. I run a 13 EMA. I run a 200 EMA. And then I'm running your simple volume indicator. I run a TTM scalper indicator. And I run a PRS, which is a pivot reversal strategy. My pivot reversal strategy is a computerized indication or suggestion of an entry and exit point. The PRS, you see this blue PRS, they were saying to close right there. And then right after it, you see this blue PRS, it was saying enter here. So that's an entry. Now listen guys, this thing is not God. You cannot turn it on and think that you're going to make $1 million. But some people use it as an indicator, as a clue, as a helper to find great entries on coins. I might have entered there, but I wouldn't have entered just basically solely off of the PRS. I would have entered because the RSI was low, so I still knew it had time to run. I would have entered because this TTM bear cycle was coming to a close right here, and I saw it. I would have entered because I saw these big fat volume candles coming in. And I probably wouldn't have entered there. I probably would have entered somewhere around here. When I started seeing these chunky volume boys coming in, them boys rolling into town, I would have entered and I would have sold up here. Now, how do you sell? I sell based on a couple things. But one of the things I do is I do a thing called redundant RSI. And basically, redundant RSI means looking historically where the RSI pullbacks are. A lot of times, you can feel or you can have a premonition of that RSI pulling back at certain levels based on what it does historically. Here we see it pulled back here, and this is a little higher up. There's a little distance there, but it's still in the same general neighborhood. The moral to the story is, when the RSI gets up around here, I know it's going to pull back. I know it's coming. And as a scalper, I don't want to buy here, it pull back here, run all the way down here, and then come back up and then finally sell up here. That's not what I'm trying to do. I'm trying to buy here, run up here, sell up here, wait for this pullback, buy right around here once I know it's going up and I know this isn't a bull trap for a further dip. I'm buying right here when I see these volume candles coming in, and then I'm running this wave up. Now, once I get to the top here, there's a couple ways I know that things are slowing down and it's turning around. One is, if you'll look, a lot of times in the middle of the move, look, long candle, long candle, long candle, longer candle, super long candle. At the beginning of the move, check this out. Nothing but short candles right there. Boom, 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 boom. At the end, look, these bad boys are getting shorter. So another thing that will give you an indicator too is a lot of times these candles are slower, so they fill up slower, meaning they'll go tick, 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 and finally build up that much. On these bigger candles, they're going, and they're posting those bigger candles really fast. So as it gets to the end, you can literally, almost like a wave coming in off the ocean, it comes in, and then at the critical mass point where it's going to turn around, it slows down until it gradually reverses and rolls back out into the sea. And you can see that at the top of these waves. If you start watching these, you'll get almost a sixth sense about it. And a lot of times I'll be in voice and I'll say, it's reversing, and sure enough, boom, it reverses. And that's what I love to trade charts like this. I know I've obliterated it with tons of yellow lines, but I love trading charts like this because it's beautiful waves that are coming in and out, in and out. This is a scalper's paradise chart. Scalper's paradise. All right, so next, let's look at this. And basically what this is bite size. Eventually, you get a bad bite. You're eating those apples, and you're taking bites out of them, and you're going to get a bad bite. You're eating that delicious steak, which I love steak, and now this is making me hungry. But you're eating that steak, and eventually you know somewhere in there, there's probably a little bit of fat, and I don't like fat in my steak. So what's the best strategy to eat the steak? You know, this chart, I'll be honest with you, this chart's pretty choppy. And what I mean by choppy is anytime that candle goes up and then the next two candles, they kind of encompass where the price action that candle did. And you look at this and you're like, you can't put 3 strong green candles to save your life together. You can't really put 2 real strong red candles to save your life. Here's some little ones. So this is choppy. You look at this whole area, and from here to here, it pretty much stayed in there. So not really much is happening as far as the price. This is danger will ranger for scalpers. Don't do it. Don't open scalps in this. It's just a bad idea because there's nothing confirmed happening. It's tentative. It's unconfirmed, and this is choppiness. Another area of choppiness is going to be right over here. This is bad for scalpers. You just want to avoid it. Kind of looks like a barcode in a way too. So you want to avoid choppiness areas. You know, this excites me. See this nice swoop down? This excites me more than this choppiness. This choppiness is what we run from. So run from it. But this is what excites me because it's a recognizable, strong move. Now, it's a negative move, but hey, at least it's making up its mind and doing stuff. So this is a great area where this is a death trap. And a lot of people that are new to scalping, they might say, hey, look, the Bollinger Bands, they're constricted here, which that's important. There's a couple good green volume candles, but look what I just saw. I just saw the one thing that, for me personally, I've identified as a no-go land for me. It's choppy here, and choppiness is not good. So even though this kind of looks like a breakout here, you see that? But another thing, if you zoom in real close, on top of these good green candles, there's big wicks where the selling pressure drove the price down. Right here, too, there's a big wick. So those are 2 indicators. Even though they're 1-minute candles, it matters. See on this move right here how there was no wicks on top of these candles, and it kept moving up. Yeah, we had this red candle here, but on top of these, there's no wicks. It was just moving up. Just moving up. That's what you want to see. These long wicks are indicative here. Another thing that's indicative is just this region of instability right here, this choppiness. That's the big one that tells me, even though these Bollinger Bands are constricted right here, that I do not want to entry here. And then, if I do, say look, PRS, that's another reason why don't rely on PRS as a god. It works really well when coins are like this, and it's like, when coins are like this and it says, enter here, it works great on confirmed bullish trends on giving you great entrances. And look, it's gone up to here, and it still hasn't told me to exit. Now, me personally, the way I trade, I'm exiting there, I'm buying here, I'm exiting there. So PRS works great in great instances. When the charts are choppy like this, it does not work great. So don't take it as the Bible. Another thing is, if I say I entered here and I followed PRS's advice, and it went up to here, as soon as it posts this massive, ugly red candle with a massive wick on top and bottom, and then another red candle, and then another red candle, well, guess what that pattern is? That's 3 black crows. Those 3 red candles. I know this is about to go skadoosh and dump. I will sell right here. I'll take a loss. I'll do whatever I have to do, but I'm getting out. Because I know, and I run these alts all the time. And I will sell, and I'll say in voice, I'm selling here. And people are like, why? It's going to go up. And then 5 seconds later, they're like, oh, that's why you did. And this is one of those situations where I would sell here and even take a loss. Because there are certain patterns that hold tons of weight. And 3 black crows is one of them. Head and shoulders is one of them. There's just a bunch of patterns, and they hold weight. So you got to know those. That's why it's important. Take your pattern study to heart. Take it seriously. And research and learn that stuff. Because you got to be able to call it. It's got to be second nature to you. Okay, so when it comes down here, it bounces around. But we're going to use these scalp positions hypothetically. So you can see here where I made these brackets or parentheses. I made them as an example of our scalp positions. So this first one, I enter right here, and I scalp and sell up to here. The second one, I enter here, and I scalp and sell up to here. Now, honestly, in real life, guys, I use this chart for example, but there's no way I really want to scalp this chart. It's too choppy. There's too much mess going on. There's too much soup right here and then right here. So I probably wouldn't touch this with a 10-foot pole, in my opinion. But say I did, and say I entered into this scalp, and then I did this one. So now I've got 2. Wow, I'm feeling good. And then now I do this third one, and I do this fourth one up here. And I'm like, well, it's putting in these red candles. It's been choppy. I should get out of this, but I don't. Well, I go for one more over here, and what happens? I buy right here, which I've already goofed up because the beginning of the wave started way down here. But say I buy way up here, and it turns around on me, and I realize, oh my gosh, maybe this was a double top. It's about to reverse, and maybe it's about to take a massive dump. Well, I sell right here, and I sell for a loss. I have losses. I take losses in trading all the time. It's part of life. Now, you got to know how many losses you can take. And you also got to identify why you're taking losses. A certain amount of losses are just going to happen. But if you're only getting 1 loss out of 5 trades, then you're doing pretty good. So I'm not worried at this point. My account's growing. The overall amount of Bitcoin and US dollar I have in my account's growing. So that's awesome. And I'm not making deposits to make it grow. Goofballs. Anyways, so I bought here and I sold here and it was bad. Now, here's the deal. If you had used a macro trade here, you would have lost a little bit more money than you are going to lose with the micro trade. But here's another thing. Let's say that this was a panic sell. And if you don't know what that is, eventually you'll experience one in crypto. Sometimes a bit of news can come out, or this or that, or FUD, and all of a sudden FUD hits. And you're doing this scalp live. And let's say you have $600 in this macro scalp, which, seeing this part of the chart, if you would enter a macro scalp up here, I would just say you need to rethink everything because it's awful. This is an awful chart to macro scalp on. Now, that being said, just say you did and it was a $600 scalp, and also panic sell hit here. An article was just published. Turns out the owner of the cryptocurrency has been embezzling, blah, blah, blah. And it dumped. Well, a lot of times when that happens, there's no way to sell, because what happens is it's selling so fast that you set your sell right here and it's gapping over it. Boom, 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 boom. Well, say that happens, and finally the coin finds a base down here, and you sell it right here. You've lost tons of money, which means that not only should you review why you're taking macro scalps when the chart looks like this, but also you should review how often you're taking macro scalps. That is to say, with a micro scalp, even if it went down to here, look, if I lose 1/30th of my account, I'm going to be fine, of my scalping account. because then my scalping account's only 30% of my overall account. So that's another lesson for macro versus micro. Macro is good and you can do it, but you got to make sure the charts look like this, where it's just, oh, it's beautiful, it's climbing. It's doing its normal pullbacks, but you read this and it screams, to me personally, it screams macro scalp, and it's exciting. Alright, so you got to know when to do them. Another thing I wanted to talk about too here is redundant RSI. And a lot of people ask me about exits, and I'll talk about them more in just a second, but redundant RSI plays a huge role in exits. And what I mean by that is I've drawn this blue line here, and I drew a yellow one too, because every time the RSI touches this blue line, which it wasn't there before, but every time it does, the RSI, Relative Strength Index, it turns back, and it turns back dramatically slow. So it touches it here, it touches it right here, and it touches it right here. And you have to look for these patterns when you're trading. So redundant RSI is really something interesting to study in RSI in general. Because if I am trading and it hits this redundant, sorry about that, and it hits this redundant RSI spot here, I know that it's going to pull back. A lot of times when I'm scalping, I'm going to sell before it gets to that historic RSI point where it keeps pulling back. It doesn't have to follow that. It doesn't have to all the way go up there. It can go up like it did here. It can go up to right here and pull back. But I know historically it never goes beyond this point. And that's important because I want to sell right here instead of at the top of the RSI hill. I want to get out before this thing turns around because I'm selling each individual wave. I'm not buying and holding. And by selling each individual wave, you should be making more money. Alright, let's look at the scalping and let's consider my stake analogy. What do I mean by stake analogy? Well, scalping is risk management. It can be risk management if done properly. Consider the stake analogy. You've got a nice juicy steak, which I've got here on the screen. You've got a nice juicy steak, and somewhere in this steak there's one. Hold up real quick. Gotta change it to red. Alright, so somewhere in your steak there's one piece that has a piece of fat in it. And let's say it's this one right here, and it's got fat right there. Like, this is what scalping's all about. You're going to have to throw the piece of steak out that has the fat in it. So, instead of eating the steak in strips like this, why wouldn't you cut it up into tiny little pieces? That way, when you get done, you can eat all those little pieces, and you're still going to get filled up from your steak, and you're still going to fill your bank account up with it, with profits, because you're doing tons of little bites, tons of little trades. And eventually, when you get to that one trade where the market pulls back on you, yeah, you're going to have to take a loss, and you're essentially going to have to throw this trade out. But you're going to have all these other stake pieces, all these other trades that went good. That is the beauty of scalping and micro scalping with a smaller account, with a smaller amount, and using a smaller part of your account. It means more meat, less fat. It means more profit, less drawback. Only if you follow your rules, though, and only when you're micro scalping. Alright, what does it do? It lessens exposure by limiting higher risk, it lessens exposure by limited risk, higher frequency profit taking. Wow, that's a mouthful. It's limiting risk, and you're making higher frequency tradings and higher frequency profit takings. A brief exposure to the market diminishes the probability that you run into an adverse event. You're eating more pieces of steak, so when you eventually find that bad one where the market turns on you and you calculate it wrong, you only have to throw out this little tiny trade. You only have to throw out this, you only have to throw out this one up here, instead of, buying from here and holding to here and it reversing on you and you losing a lot of money because you weren't at the computer or whatnot. Smaller moves are easier to obtain. A bigger imbalance of supply and demand is needed to warrant bigger price changes. That is to say, it's easy for a coin to move 400 Satoshi, but it's harder for that same coin to move 4,000 Satoshi. It takes stronger market forces. Smaller moves are more frequent, so for us, that's what we're looking for, small moves. And they're more frequent than the larger ones. Even during relatively quiet markets, there are many smaller movements that we can exploit. Okay, we're about to get into technical scalping. Entries, exits, sizing. I've got a couple final things to go over real quick before we do that. Scalping by the numbers. Scalping sometimes generates less money than buying and holding. That doesn't mean you're losing. Because you're still mitigating risk and you have less risk than those that are buying and holding. Losing money means you're losing. So that's another important part of tracking your account and tracking your purchases. Losing money means you're losing. That is a mental bombshell. That's profound. That's deep. No, but seriously, if you're losing money, that means you got to change something. Something's wrong. So when you're new to trading, you should be tracking how much Bitcoin, how much money you have in your account, and really staying on top of that. Specifically, Bitcoin. I am personally, my style of trading is I trade for more Bitcoin because I believe in the overall value of Bitcoin and I know it's going up. All right, next, scalping when done properly. Sorry, that should be done. Scalping when done properly removes some dangers associated with sell walls, fib levels, and psych levels, and we'll talk about that in just a second. Scalping by the numbers. Remember, small consistent growth is better than sudden quick destruction. Ancient scalping proverb. Actually, I invented it, and I think it's actually a great little quote. 10% of scalpers make good money. That was the best number I could find online. A lot of places even said 5%. Of those 5 to 10%, only 1% of those are making good money. You need to be at least in that 5 to 10% that's making money, and it would be really cool to be in that 1%. The 1% of scalpers that are making good money are going to watch this entire presentation from front to back, maybe multiple times. Scalping by the numbers. If you don't understand shooting star candles, Bollinger Bands, RSI, stochastics, high-speed res fans, 3 black crows pattern, head and shoulders patterns, ascending triangles, and trading in general, stop here. Take these Allegiant classes, become experts, and then come back and do this class. You have to understand the fundamentals to trade prosperously. All right. Now we're going to start getting into more of the nitty-gritty. So scalping, basically, essentially what we're trying to do is we're trying to enter and exit multiple times while someone would buy and hold. And by doing that, we can limit danger or risk associated with different events, and we can hopefully make more money than the person buying and holding as well. So scalp 1, okay? Here we are, scalp 1. This is scalp 1 right here. And you enter it at 6,200 down here. You exit at 7,500 up here because you're perfect and you can call the top. You invested 0.3 Bitcoin. You bought 4,826 ripples. That's what this is. We're on Ripple. And the result was you walked away with 0.36 Bitcoin. Now, you had a gain of 20%. Scalp 2, which is this guy right here. You entered with at 6,850. You exited at 8,275 right here. You invested. You rolled your proceeds from this over into here. You invested 0.361 Bitcoin, which is 5,258 units. The result, after you cashed out of that scalp, was 0.439 Bitcoin. So you had a 20% gain. All right, next, scalp 3. And that scalp 3 is right there. You entered the scalp at 78.50. You exited at 8,600. You invested 0.439 Bitcoin. Got 6,396 units of ripples. Your profit was 0.45 or 0.54, and your gain was 24%. So when compared against scenario 1, which was enter here, exit right here, their profit would have been 0.114 Bitcoin. So total, they would have 0.4114 Bitcoin. This strategy over here, 0.54 Bitcoin, resulted in about 0.15 more Bitcoin. So that's pretty cool. That's what scalping is all about. Not only that, but when it got up here and it got real choppy, blah, 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 until it settled down right here, we didn't enter in. So we avoid some of the choppiness. Again, this chart is more hypothetical. I would probably scalp this run right here. This run right here, I would not like, just because it's too choppy. And I might not scalp this one either until it got to about right here. And that's just my personal style. I like really clear, confined, and concise moves on charts. But the one good thing about all this that we're looking at on this chart is the overall trend is up. So that's pretty cool. And it crossed the 200 EMA right here, which on a 1 minute, or actually this is 15 minutes. So that's important. That's bullish. If it'll cross under the 200 EMA, that's bearish. And this green line is the 200 EMA. You turn that on by turning your indicators that we talked about earlier on. Obviously, I use TradingView. This is just a side note. I use TradingView because some people have talked to me about Coinigy, but the charts on there lag, and they pull from TradingView, but they lag, so I don't use Coinigy at all. I use TradingView and Bittrex. Let's get more into scalping. Before we get into the technicals, entry, exit, sizing, I just want to talk about scalping psychology real quick, because it's an important part of scalping and whether you're going to succeed. Alright, so next. The allure of scalping is that it's quick money. That's why I've had an overwhelming amount of people ask me to show them my style. It's quick money, so it resonates with our culture. People want to scalp because they are impatient. They don't want to hold and wait. They want Lambos. They want them now. And when moon. A lot of people ask us goofy questions like that. They're like, CVC, when moon, or THC, when moon. That's a great attitude. That's great for getting your Bitcoin squandered. The reality about scalping is that it's awesome. It's exciting. I've made tons of money on it. And the opportunities that we take as scalpers, though, are qualified on a very stringent basis. We're not just running and gunning and shooting at everything that moves. It often takes countless hours of watching, scanning, and qualifying to identify the opportunity that you're looking for. If you're scalping any other way, you're just betting and gambling. And for that, you can go to Hard Rock Casino in Las Vegas. It's a cool place. Speaking of casinos, I made this little graphic, which I think is hilarious. On the left, you have the perception here of what people think scalping is all about, quick money and sexy rock and roll. And then on the right, the reality. That's me on any given Saturday at about 9 p.m. at night when I realize I haven't gone outside and I haven't fed my dog, and I've got 3,000 missed phone calls on my phone from people that supposedly care about me, and I'm desperately trying to find a trade with my 3.5 floppy drive container right by my computer. So anyways, the reality is scalping's lonely, tiresome, exhausting, boring, frustrating, arduous, non-glamorous, but the money we make, man, and I made it. The money you make is exciting, it's sexy. We scalp for money. We don't scalp because scalping's sexy. The true process of scalping is very methodical, calculated, professional, and it takes tons of time. And that's exactly how it should be. Remember that. Scalping is sometimes lonely. It's sometimes tiresome. It's sometimes exhausting. It's sometimes boring and frustrating and arduous and non-glamorous, but it's worth it. You make money and it's exciting. So, the psychology of scalping. Let's talk about a couple character attributes that great scalpers have. One, they are not afraid to study. They put in their homework and they know their homework front and back. They are almost teacher pets. Two, they can work alone, but they can also work in teams. A lot of times in Allegiant, we will get in voice chat, and I'll have KP and Dreamer and a couple of the guys, and we'll scalp coins together, and it's very, very effective. Because then you're not just requiring on you to see everything. You've got a couple eyes and ears watching for you, looking at new coins, looking at patterns on the same coin you're looking at. And we're looking at different time intervals, and it's powerful. But also at the same effect, I can spend a whole Saturday, turn all the communication devices off, which I don't do because I love being an Allegiant. But I can do that and do perfectly fine scalping by myself. So it really comes down to you and your style. Number 3, scalpers do not lie to themselves or their team. Their emotions do not change their perception of reality. Some people that are scalping that have more money than they probably should be using, I've seen them be ridiculous with themselves and say, "Oh, the only reason why I took that loss is the sun was in my eyes," or I got bit by a mosquito last night. Just ridiculous stuff. Obviously, they're not saying that, but they're making excuses. And good scalpers that are in it for the long game, they're honest with themselves, and they're able to stop and take a step back and say, "No, that was a mistake. I used too much in that trade, or I should have looked at this, or I should have pulled back and looked at the 1-day chart." Number 4, scalpers block everything out, and this is a great trading tip in general, guys. If you're serious about this, and if you got any type of serious money in it, you need to be scalping in a very quiet place. You need to be scalping in a place where there's not distractions, dogs barking, your parents, your sister, your neighbor, whatever it is. You should be in your zen place and maybe play music. Maybe you do the mister. That's a little de-stressor, but all of that matters. So scalpers block everything out. They don't accept distractions. Number 5, most important, scalpers are brutally relentless and they're doggedly optimistic. No matter what, they keep studying, they keep learning, they keep training, and they work hard. Alright, now we're getting into the technical part of scalping, which is what everybody's excited about, excited to learn it, and wants to know. So first of all, I talk about my setup, which this might help you with your setup. So personally, my setup is a dual monitor configuration, and I am running TradingView on this monitor over here. And again, I'm running like 1 to 5 minute charts. I'm watching all my indicators that we talked about before, and then on this one, I'm looking at a couple things. This guy over here on the right is going to be the CoinMarketScanner.com. And then you got Bittrex here. One thing about Bittrex is I am not looking at charts on Bittrex. Bittrex charts are laggy, and not only that, but they're awful. They're just awful charts. I'm looking at the most important thing you can look at on this page, in my opinion, the order book. And we're going to talk about the order book more in just a second. Another thing that I've got right here is I've got the Bitcoin ticker, and I've got a text editor right here. I've got a calculator right here because that helps me run numbers really quick. And then down here in the bottom, I've got Allegiant because I'm watching what happens in the chat room and what people are posting. A lot of times they'll post signals or alerts or charts, and I want to see those as soon as they pop up. So let's blow that up and talk about it for just a second. This is important that you have your setup right for as far as scalping. Let me get a drink real quick. Okay. So on my setup, obviously I've already identified my target, which we're going to talk about how I identify targets in a second. But I've already identified one, and I'm on XLM. I'm logged into Bittrex. I'm good to go. I've clicked order book here, and I've turned this to the order book, so I'm watching the order book. What I do is once I enter a trade, say I want to spend 0.01, whatever this is, I'll enter that here into this part of the order, or the buy book. And then I'll say price last right here. And basically what will happen is it will automatically calculate the number of units I can buy for me wanting to spend that amount, which is this amount. And for me wanting to buy the last price. Now, here's what I do a lot of times. A lot of times, like I said, sorry about that. A lot of times I am charting the chart on this monitor right here. So I already know what price I want to get it at, and I go ahead and put that price in there to get filled. I make sure it's the right amount of Bitcoin that I want to spend, and I hit buy XLM or buy Lumen. And as soon as that order filled, remember, most of my trades happen 30 seconds to 3 minutes max. As soon as that's filled, I copy how much I ended up spending on the transaction, and I paste it right up here into text editor. Why do I do that? Because this is what I call my beat number, beat, B-E-A-T. And really, it's just a fancy word for break-even number. So as soon as my purchase goes through, which I wouldn't buy in this situation on this order book, because obviously it does not look like that buy side is strong at all. But we're just using this for hypotheticals. As soon as I get that order process, I hit max right here, like almost going as if I'm going to sell it. And sometimes I literally do sell it that fast. So I'll hit max, and I bought XLM, so it'll have like 300 or something written right here. And so I'll hit max, and then I'll hit price, and it'll pop down, and I'll select last. So when that happens, it's going to tell me if I sell all the new XLM I just purchased, and I use the last price that was just filled, so in this case it would be 4997. How much Bitcoin I would get. Well, I know that the Bitcoin I would get has to beat my beat number. It has to break that break-even number. So what I do is I go ahead and start playing with the pricing right here by entering different numbers right here, and it will automatically update your total that you're going to get from when you sell it. Remember, I haven't pressed sell Lumen. I'm just manipulating the price inside of this sell form to see what I have to get as far as the price action in order to make money. And a lot of times I'll calculate by looking at the chart on my monitor that's over here, my dual monitor that's over here. I'll calculate basically where I think this is going to go to. I never press sell a lot of times until it's pretty close to where I need it to go to. So if it's a 50 Satoshi or 100 Satoshi difference, I'm hitting sell. Because a lot of times that price action will go up, it'll hit it, and then it'll go right back down. And if you don't have your sell in for that limit, that level, then you're not going to get filled. Because by the time you hit buy, sell Lumen, and hit confirm, it's already going to drop down here. You miss your chance. May as well pack it up, go to McDonald's, and buy a Happy Meal to make yourself happy again. I love Happy Meals. Anybody wants to buy me a Happy Meal in exchange for this video, I'm down. Alright, so anyways, another thing that's good to look at on the order book is these bad boys down here. This is the buy side and the ask side. And I love paying attention to these. Right now it says 211 Bitcoin on the buy side. And basically what that'll tell you is a lot of times once I identify my 1 or 2 coins that I'm looking at as the target for that night for scalping, I will look at these numbers, and a lot of times I've detected news with a coin just by that swelling. If I see that go from 211 Bitcoin to 500 Bitcoin in the next minute or two, I know something's happening because a lot of people are wanting to buy this XLM. Usually it's a news article, it's this or that, and I'll show you how I find that stuff out. That is important to scalping. You have to be looking at all of these numbers really and know which ones matter. So these two right down here, they matter. You need to be watching them. And I'll talk about a little more why in just a minute. So that's basically what I have on my screen. And that's basically why I have it. Sorry about that. Next slide. Alright, let's talk about scalping death traps a little bit. These are fun. But these things are things that no matter who you are, really, whether you're a scalper or a regular trader, they can ruin your trade. So let's look at them. Had to get a drink there. Now, number 1, spoofing the books or ghost orders. Some people call it different things, but let's talk about it. So when the books are spoofed or being spoofed or in the process of being manipulated, this is kind of like what you'll see. You'll see 1 second, you'll see this chart up here. And on the buy side, you got a little support here, but the sell side is much, much larger. But then what you'll see is every now and then this will pop up where this massive wall pops up. And look, there's so much buy support. That's 30 Bitcoin. And it went from 5 Bitcoin and swole up to like 30 Bitcoin in no time at all. And now, wow, there's so many people wanting to buy this. Well, not so fast, Capitan. And here's why. I actually found this one from 2 nights ago, and this is an XRP order. And you can see right here, this bad boy shot up, and a real good indicator that something weird is happening is that this is a straight up cliff. It's a cliff. It's a straight wall. Now, sometimes that happens with coins that are at site numbers. And what are site numbers? Site numbers are like 5, 10, 15, 20. Any number that's a nice, healthy, rounded number, like 15,000. When Bitcoin gets to 15,000, it's a site number. And those hold a lot of weight when they're acting as support, and they also hold a lot of weight when they're acting as resistance. So the first time Bitcoin breaks 50,000, it will be a psychological breakthrough. It'll be huge. It'll be awesome. Anyway, so there's site numbers, and a lot of times people arrange their sells or their buys around site numbers. So if this was the site number, it would be a little more believable. But one of the things that has me not believing it is on any wall, there should be like a little thing like this where it breaks down a little bit on this buy wall. It shouldn't go straight down like that. That's an obvious sign of spoofing or book manipulation. See how this sell wall down here, it's kind of gradually and it goes up. Now, right here, look, guess what? Ding, ding, ding. This is at 20. This is at 20. So that's perfectly normal for that massive wall to be at 20. That's perfectly normal that a ton of people pick that nice, fat, rounded number to put their, say, I'm going to sell my Ripple when it gets to 20. But if it wasn't at 20, it would be suspicious. Especially without all of this leading up to it. So right here on Ripple, we have this massive wall. And sure enough, as I watched it, seconds later, poof, that wall disappeared. So why do people do this? It's called ghost orders or spoofing the book. Well, one way that you can look and find out whether these orders are real is you look at the tape, which I think we were just looking at that previously. No, I got it up. I got it up on an upcoming slide. But you look at the tape, and I'll show you the tape in just a second. And you see if these orders from this massive 80 Bitcoin wall are being filled. If they're not, you know that this guy is probably going to pull this. And when he pulls that, the price of Ripple is going to go down dramatically. And there's a couple reasons behind that. One of which is that everybody like me that's a little trader with little money that might have their buy set right here knows that basically the wool got pulled out from under them. They've all been tricked. And so a lot of them will cancel their buy orders like all throughout here, knowing that there's not the buy support and that this coin's probably not going to go up in value. And so basically what happens is it causes also a panic selling, and it causes a panic on a buyer side where they don't want to buy it because they know there's manipulation. And sometimes it can cause panic on the seller side to where they're just wanting to get out before this price just plummets down. All right, next slide. All right, why does this happen? And why is this a death trap for scalpers? Well, a lot of new scalpers, they will see this awesome support right here, and they'll dive in and buy it up because they know they've got this big wall supporting them, and that if some of these people that are mixed up in this wall will get off their money and start buying, it could cause FOMO, or it could cause like a buy up, and so that would be a good scalp in that case. Now, from a whale's perspective, whales spoof the buy side, which was the green side, to drive the price up. It makes the price go up when they put those big walls and pretend like there's so much buyer support. Whales spoof the seller side to make the price go down and make it look like tons of people are trying to sell the coin. 99% of the time, spoofers and these whales doing this never allow these orders to be filled, or they only allow a small fragment of it. This means that the walls are nothing more than psychological market manipulation. And most of the time it works. If it didn't, they wouldn't try it at all. I feel this manipulation works exceptionally right now, in part due to the high volume of inexperienced traders in cryptocurrency. But not anymore, because you took this class and now you know. So to be an excellent scalper, you must be able to watch the order book and determine when it's being spoofed. And part of that is just from watching it and watching to see if those massive orders are turned on and off, flashing on and off. Another thing is, once the price gets close to them, do those orders disappear, or are the orders actually filling? Another way to watch it is whenever you see a straight up cliff on the order book and it's not close to a psych number, you know that might be a spoofer. New traders will look at the overwhelming force on the order book on one side or the other and believe it wholeheartedly, instead of watching it and being suspicious and for a minute trying to determine whether it's real. This is FOMO at its finest. Many times they rush in to have that massive wall or carpet pulled out from under them as the market maker sells or buys at the position he was trying to reach through simple manipulation. Again, these whales are on the buy side. They're making a big buy wall to drive the price up. So then they've got bags that they own, or they've got coin they own, and once they drive that price up through that wall, they're doing the same small Satoshi moves that we're doing. Once they drive it up a little bit, boom, that big order comes through and they sell off. Again, they're doing the reverse too. They're adding massive sell walls to drive the price down. And when that happens, they buy up. They buy a big bag. This is my money bag. A big bag of it once they drive that price down. And then that sell wall disappears. And then they let that coin continue its current course. And in my personal theory, my theory is that the coin has an overall bullish trend, but they already own a bunch. And say they bought a bunch down here at the bottom. When they realize that this is going to continue right around here, they may do a massive sell wall here using the coin that they purchased down here. And so it makes it look like there's an impending sell-off. It will drive the price down a little bit, which helps them get a little discount on the next big amount that they're going to purchase. Then once they purchase this amount, that sell wall goes away. They let the coin continue its normal course, and they sell up here. But they made a little bit more by driving it down here. And sometimes they're not buying and holding long term. They're just playing these wars on both sides of the order book. And sometimes you'll have whales on both sides of the order book trying to do this. And that's when it gets real crazy. Next, getting caught in the cold. It's winter in Florida, and it's about 50 degrees outside. And that doesn't sound very cold, but Florida's got wind. And believe it or not, if you don't wear your jacket, or in my case, my favorite Stranger Things hoodie, it can be cold out there, and you don't want to get caught in it. Just like that, on the market, you don't want to get caught in the cold. And what that means is Bitcoin can turn on you. When Bitcoin leads, alts bleeds. You got to think that every alt price that's on a Bitcoin pairing is tied to the Bitcoin value. So when Bitcoin goes up in value against the US dollar, meaning each Bitcoin's worth more, that means each Satoshi's worth more. That means if you own an alt and it's valued in Satoshis, I've got, 2 Ripple coins, and each of these Ripple are worth 10 Satoshis. Well, as the monetary or the USD value of a Satoshi goes up, that means your Ripple is going to be worth less Satoshis. So you're losing Satoshi value, and that is not good. That's not fun. And that's why when Bitcoin leads, alts bleed. And when Bitcoin's on a rampage, that means it may not be a good day to trade. And if Bitcoin goes on a rampage for a week, it may not be a good week to trade. But it's always a good week, a good way, a good day to educate yourself. So keep that in mind. That's a death trap for traders and scalpers. So it's important to have that Bitcoin ticker. Like I pointed out before, I had the Bitcoin ticker on my computer all the time, and I've been trading so many times, and people say Bitcoin's running, or I'll see the ticker and I'll see the tape and all these orders come through, and I'll realize, Bitcoin's surging again. I should probably get out of this alt trade, and I do, and it saves me a lot of money. And here's a view of that actually here. Right here is the Bitcoin ticker, and you can go to bitcointicker.com. And the cool thing is you can set it based on the Bitfinex. You can set it based on the Gemini price for Bitcoin, the Coinbase price, whatever Bitcoin pricing you want to go off of. You can do that. And right here, you can see these orders piling in, and so you can kind of get the general momentum feel. Another thing that helps is being an Allegiant. We'll often call out what Bitcoin's doing over voice, and that helps inform your trades. Another thing that I want to say on this is I use cryptomarketscanner.com, cryptomarketscanner.com. You should check it out. It's a great tool. Next, another death trap is getting caught in a position. You got to be able to be on the move. So your sizing matters. And we talked about that a little before, and we'll talk about it for just a second more in the future. Another death trap is breaking your rules. Write your rules down, because when you're not honest with yourself that your strategy is not working, you're bound to continue the same mistakes. So this is a death trap for scalpers. All right, next, let's talk technically about scalping. This is the fun part. Identifying a target. How do you pick, Spectre? How do you pick the coins that you're scalping? That's a great question. So here's how I do it. Number one, there's a little tool, sorry about that, there's a little tool called Crypto Market Scanner, and you can go to cryptomarketscanner.com. I kind of shrink it down into this little panel type view, because I put it right over here in the right side of my screen. It would literally go right here. But on this, you can see a couple things. One, it tells you the ticker. It tells you the percentage change. It tells you the exchange, of course. I'm on Bittrex, so I'm only looking at Bittrex coins on here. And it tells you the price move. It moved from 13,207 to 14,530. It tells you the volume of Bitcoin in the past 24 hours. And it tells you the current bid and ask, so you get the spread. Now, here's the deal. This is a really great way to find coins that are on the move. One thing that I'm not doing is I am not trading coins that look like this, that are super blocky. I don't trade coins that look like Braille, Trig looks decent. This one, XST, it looks really blocky. UKG, it looks really blocky. See how it goes up, down, up, down, up, down on these 1 minute candles, and really goes nowhere. I hate trading charts like that, and it's a great way to lose your money. What I am doing is charts that are got this general slope up, gradual slope up on trust. I love that. Look at Trig with the slope up, and these little volume candles are not volume candles. Price candles are starting to move up. Even ticks. I like the way ticks looks. So, but really, what I'm looking for is something like maybe like XDN. I don't like how blocky this is, but I'm looking for that general arc, that swoop, that liftoff, that gradual takeoff. That's what I'm really looking for. There are not too many good examples of that on this. This is more to talk to you about this scanner. But you'll know those arcs and those liftoffs when you see them. One thing that I would say about Crypto Market Scanner is if you scroll to the top of the scanner, it will let you change many things about it. One, the exchange you're using. Two, you'll be able to limit it to certain amounts of volume. So you can say I only want coins that have over 0.25 Bitcoin in the past 24 hours. And you can say I want coins that have grown 3% or more in the past 30 minutes. So you can set parameters, and that helps you use this tool. Another great place to scan for coins that are going to be great to scalp is Crypto Market Cal. This is a calendar that's cryptocurrency community based and driven. Here you can scan. Oh man, I can't even talk. Sorry. Here you can look by coin, or you can look by last added, or you can look right here and see what the validation of the rumor is or of the news is. So right here, 10X has a listing on Robinhood, which I believe is a new exchange, and 90% of the people that voted on this say this is legit. And a lot of times, what people are required to do is submit proof. So it's like, how you're saying this because of what? So proof is required, and you can see here the date it was added, and then you can see here the date that the event's supposed to take place. So what I've done on CryptoMarketCow.com is I've gone through every single page and I've read every single page worth of news. And I've got a little notebook on my computer desk, and I sit there and I write down anything that I think might affect price action on any coin. And so a lot of times I research these news events even more, and then I'll take that and I might buy that coin based on that news and what I think the price action might do because of it. So that's a little strategy, and I use it for scalping coins and finding coins that are good to scalp. Coins that just had news that's dropped, that's good news, oftentimes go up in price, and those are great coins to scalp. Another thing is that once you read through all the pages on here, what I do is I just then go back and I click last added. So then I'll only have maybe 10 for that day. And I check it multiple times a day because I want to be super in the know. Time is of the essence in cryptocurrency. And a lot of people, like if I announce a hard fork for June, people already go nuts about it and buy tons of the coin right now. And honestly, a lot of times by June, the coin's gone way down in price. It's more about when the events are announced. Like, so if the event's announced today, it spikes right here. And then say the event's taking place right here, we may see another little spike. But right now, people are so speculative and there's so much FOMO that people are really reacting to these news events as soon as they happen. So scalping all of this area on the way up is awesome, and I do it all the time. And this is a great place to find those coins that you're going to do that on. Specifically, you're looking for stuff like hard forks, airdrops, and stuff like that, or really anything that's fundamental and groundbreaking. Like I just scalped Fun. They're getting their gambling license in January from the UK and starting their first online cryptocurrency-based casino. So I scalped that, and I discovered that news on this site, and it's been a great coin to pay attention to and scalp during its nice little bullish trend that it's been posting. Okay, next, another great place, you guessed it, it's Twitter, and it's absolutely incredible. So much of trading, even in the stock market nowadays, is socially based. One thing about Twitter, I can tell you, is if you use the $ and then the ticker symbol for the coin, you can search any coin and search any news about that coin. So it's a great way to kind of get yourself in the conversation about a coin. If you see a coin that's moving in price or this or that, and you want to figure out why, first place I would go to is I would go to Twitter and I would $ and then search the ticker for it. And then another thing you should probably do is follow the exchanges on cryptocurrency. Maybe follow some of the big guys in cryptocurrency, and definitely follow the actual coins themselves. The coins themselves will post news and updates and stuff, and it's a good way to stay up to date with what you're doing. Next, Twitter is a great place to stock coins and discover news, partnerships, and technology that may positively affect price actions and be scalpable. There are also a number of scanners and bots on Twitter posting movers. One of those is Crypto Trader, and it's at Trader Wisdom. So what it does is it looks at Binance and it's looking at Bittrex, and it's telling you the coins that had the biggest volume changes in the last 10 minutes. These are good heads up that something might be going on with these coins or that they could run. So this is a great little scanner bot on Twitter that you should follow, and it's a great way to pick up on the scent of something that might be a good coin to scalp. You can also sign up for alerts on Twitter, so when certain coins tweet, you get the news firsthand, and it'll deliver it straight to your phone. Another place that is great for finding out information is Allegiant. I can't tell you how many times I've been in Allegiant voice chat with the boys, and Dreamer will say, XRP just announced they're partnering with Ripple. I got into that trade. I made about $1,500 on that trade. So there's a lot of fundamental and a lot of crypto news coming through Allegiant. And so if you're trading, it pays to be on. It pays to have it up. It pays to be in voice, especially when there are mods or trusted members or people that you've worked with that know their stuff in there. At the end of the day, we have new people and experienced people in Allegiant, and we try to keep, it 100% troll free. But one thing that I would say is just because there are newer people there, always make your own trades. Always take responsibility for your own trades. We talk to each other about coins, but nobody in Allegiant should be telling each other when to buy and when to sell. It's not what we do. It's not what we want to do. And it's not what we should do. We're teaching people how to trade, not how to teach each other to trade or how to tell each other when to buy and sell. Okay, we're trying to teach people how to trade. And so Allegiant is a great place to pick up on news and stuff as it's happening. Because you basically have at any time 100 people in there. So that's 100 eyes and ears that are scanning for the same information that you are. Okay, another thing that is great is top movers. A lot of times I'll go to Bittrex and I'll just click the home page here. That takes me to this page and I will sort through the top movers. And a lot of times what I'll do is I'll then go and chart these on TradingView and I'll try to figure out where they're at in their move. Do they have more room to grow? Are they done? Is the RSI overheated on the day, on the week? Or is there possibly more energy on them? Are they trading in channels? That is to say, are they trading in waves like the XRP chart we saw before? If they are, man, that's exciting scalp that we could do. If they're trading in really clear, defined, concise waves, that's a really exciting scalp. So one thing about these coins is that because they've grown so much, there are a lot of bulls paying attention to them. So there are a lot of buyers. There are a lot of people that want to make money off of these because they've gone up so far. Now, they are susceptible to pullbacks, as is anything that has gone up. But that's not to say that pullback is going to happen right now. You have to manage your risk and do that risk assessment. But I use Bittrex as a great way to find top movers and coins that a lot of energy is going on with them, and they may be operating in nice little bullish uptrends. And those uptrends can last for days, and that can make that coin a really good coin to scalp. Okay, next. Let's start talking about super technical scalping. This is the actual art of scalping. So now we'll talk about scalping the entry. So the entry, how do you pick your entry? All right, you've gone through all these other things to identify a coin to scalp, and now you found one. It's got a general bullish trend. It's got good volume. You like the coin. You see the nice, clear, concise waves. It doesn't have choppiness, and now you're finding your entry. Let's talk about what it is that I'm looking for. Well, there's a bunch of things I'm looking for. It's not one thing. There's no magic button that I can say, push this, and you're going to enter at the right time. But I'm going to go through a little bit and try to show you guys a couple things that I'm looking at. First of all, I'm looking at this overall general trend that's going up right here. It's moving up. The general trend of the coin, and I love this. The longer it's been doing this, the better. So if the coin's been going up in value consistently for a couple days, oh my gosh, I'm so excited. Because that means that if you get involved in a trade, the substantial of it pulling back and just reversing its 3-day trend is not super high. Not in this trade, not on this specific one you're going to do. I mean, again, we're only doing little waves like this, so we should be good. Alright, so now we found the coin we want to do, and honestly, I don't like the choppiness over here. I don't like this choppiness over here, and I don't know if I like this pullback here, but I like stuff that's a little more clear and concise in this. But for right now, for hypothetical purposes, this will work. I actually did scalp this the other night, and it was XLM, and I entered right here. And I'm going to explain why I entered right here. Well, one, you look down here and you see PRS, which is the computer indicator. It was telling me to enter down here. And yeah, I could have waited when it went up, and boom, and I could have sold up here. But there were a couple things that told me I didn't want to scalp there. And this is the Bollinger Band I'm highlighting right here. And I think it goes like that. Here's another one. And I think it goes like this. So first of all, the reason why I didn't want to take that is I saw a ton of selling right here. Just a bajillion. Tons of selling volume right there. The next thing was these Bollinger Bands. You see that right there? You see this right here? They weren't tight, and I like them to be tight if I'm going to scalp waves. I like my Bollinger Bands to be tight, you know, especially if I want the optimal setup. So I waited here. I waited through this choppiness. I got to right here, and I saw a couple things happen. I saw right here where it was struggling to cross this 200 EMA, which even on the one, it still matters, right? But I saw right here, it successfully crosses that 200 EMA. And then I look down here, and for 4 candles in a row, we've had green volume coming in, good strong volume coming in. That's important. So that got me excited. Another thing that I looked at is this TTM squeeze. The bearish pattern, according to TTM squeeze, had ended, and we were at the beginning of a bullish pattern. The bullish patterns in the prior to this had been significant and big enough to make profit on. So I entered the trade right here. It went up. A lot of people would panic right here and sell. I didn't, because I know the overall trend of this coin has been up for days and has been up in this 30-minute window. And so I held right there, and it came up here, and it started slowing down. Like, even though these candles were long, they started filling out a lot slower. And I sold up here, and honestly, I sold right around here. I'm paranoid, so I don't want to sell at the top because that's statistically impossible. It's absolutely impossible. Look, if I draw a line like that, and I tell you to take a pencil and literally touch the top cell of that line, it's very improbable you're going to get the highest cell structure on the line. It's right up there. And if I tell you to top the very bottom, it's right there. The last cell on that structure. It's not possible. So trading is the same thing. You're literally trying to time the top. Who cares? You don't do that. Don't do that as a scalper. What you do is, once the coin breaks bullish, meaning you've got the volume down here, the TTM squeeze is going bullish, and look, when this all happened, your RSI down here, it was only at 60, meaning it wasn't overheated. Remember when we talked about before redundant RSI? The redundant RSI here is 77.4681. Every time it hits this 77 number, it pulls back. So I know I want to sell before that happens. But it went up here, and look, it wasn't at the 77, so I didn't think the big pullback was coming. Sure enough, it wasn't. It came back up. I sold up here. And I sold before the momentum slowed down. That's an important thing. You buy after the momentum started, and you sell before it slows down. But you cannot buy after the momentum started unless you have your buy order ready. A lot of times, if I'm ready to buy and the price is $5,200, I might enter my buy for $5,300 price. Because what will happen is, say I'm buying 10 units, it's not going to jump and just gap up to $1,500 on Bittrex. It knows you want to get the cheapest amount possible on your coins. So what is it going to do? It's going to fill it as close to possible to the market price, $5,200, in order to get you your entire 10. So a lot of times it'll be like $5,235, but you get all 10 of your coins and it doesn't gap over you. That's important. It's important. A lot of scalpers mess up because they're not fast enough. They don't set their buys in advance of the price as the price is moving. When you get things that are really volatile and the price is moving real fast and it's shooting up, it's impossible to get ahead of it. Because if you just say, buy and then you say the bid or the ask price, by the time you hit confirm, it's going to change. So you have to go absurdly in front of the ask price or in front of the current price. If it's moving real fast, I might set my buy for $6,000. and it's going to fill it as close to it possible to 5,200, but it's going to make sure my whole order gets filled. And that's what I want, because I know this is a rager and it's just going to go up. Now, on this specific coin, I knew it wasn't that type of situation, but sometimes you have to do that. Especially if there's been news announced and the coin's just picking up in steam at an alarming and exponential rate. Next, so entries. When it came down here, the Bollinger Bands aren't tight, so I probably wouldn't have re-entered here. You could have done it and made money and sold up here, but me, I probably wouldn't. So there's big rules about double dipping, and it's totally up to you. I don't have any superstitions about double dipping, but I do believe that once you get a couple of successful scalps on something, that window plays out. So this isn't really in waves, but eventually what you'll see is on coins that have waves, you'll see, okay, it did a wave here, and a lot of times the next wave will be a little smaller, and then a lot of times this wave will be a little smaller. And what that's telling you is this bad boy is running out of steam, and eventually the bulls are going to be exhausted, and it's going to go down and probably consolidate somewhere. So you got to pay attention to wave height. See, this coin, I really wouldn't scalp it most of the time, just because it's not really clear, it's not really concise, it's not really defined. So I like really clear, defined waves, kind of like I showed you guys on the XRP chart. Okay, I'm gonna get a drink real quick and we'll review this. So, Spec, what type of patterns do you scalp? Everybody asks me this over and over and over. Bull flags and pennants. Triangles. That's what I scalp. I scalp them over and over and over and over and over. Literally, this is literally 80, probably more of what I chart. And basically all that is if you've got a coin and it's going up in price, and let's say it's been on a 2-day bender where it's just been going up in price, and that's awesome. It goes up here, and then it hits an area where it goes into a pattern like this, and it gets tighter and tighter and tighter. That's a flag. That's a vertical. I think they're called vertical triangles, because you've got ascending triangles, vertical triangles, and descending. So ascending would be when it forms this pattern and the price is bouncing around in there. Now the moment of truth is where these two triangle walls come together. Is it going to break bullish or bearish? And it can go either way, but that's where you watch it. And if it breaks bullish and you see that volume, those big fat volume candles coming in at the bottom, that's where you buy and it goes up. And so the opposite is true on descending triangles. It can go boom, 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 boom. And then where these come together, it's either going to go up or it's going to go down. As soon as it breaks this, you know, all right, we got some energy coming out of this. This is going to be good. So you try to buy right here and ride it a little bit, sell it at the top. I run these patterns over and over and over, and I trade them over and over and over, and they work over and over and over. That goes back to what I said before. Be a niche trader. Learn your patterns, learn what works for you, and just do it over and over and over, literally. Patent it. Make it like a pattern. Like, you know exactly how you're going to do it. You're looking for the same patterns in different coins. You're setting them up, You're looking at the same time frames, the same time intervals, and do it day after day. Use the same amount, and just slowly win. Another thing that I wanted to say is, as we talk about these patterns, the bigger the time frame, the bigger the move, the more weight that these patterns and these trends hold. So a head and shoulders reversal, if something's been going bullish for 3 days, and then all of a sudden on the day chart I see a head and shoulders pattern, that is big, and you cannot ignore it. Same thing on an hourly. This happened the other night on XRP, and I posted in chat. I said, hey guys, XRP is posting head and shoulders on the hourly. Sure enough, just a minute later, it reversed and it dumped, and it was catastrophic. And I'm like, man, I hope they saw that. So knowing your reversal patterns is very important. So let's talk about some of these. I scalp cup and handles, double bottoms, inverted head and shoulders, triple bottoms, I scalp channels, and that just means basically like, something you see two consistent historical spots, and basically something's just kind of trading, going sideways. I do kind of scalp coins when they're trading sideways, but I don't scalp choppy charts. There's a total difference. as long as the height of these waves is enough to merit profit, to get profit out of it. Next thing I do is EMA bounces. When things are riding EMAs, I scalp that too. And then the last thing I might do is I scalp indicator entries, but I only do that with TA. So that's kind of this is kind of part of all of these different types of scalping. Alright, next. So, let's talk about pennants and flagpoles and all this stuff. So, first of all, I scalp these patterns right here, and these are the triangles, and here you can see this coin came up, hit the top, it goes down, hits the bottom, hits the top, bouncing around in here, and then right here, boom, it breaks out. This is my entry. This is where I'm going in. The reason why is the volume's there. Boom. We see these massive volume candles come up. I'm going to preset my buy, and I might set my buy at 7,300, but I mentally know as soon as it breaks that, I'm going to buy it. But I'll put my buy amount, my order number, I'm going to say I want to purchase this for 3,700. Even when the price is way down here, because I don't want the price to rush up, and you'd be surprised how fast it can, and I don't want to get missed. So I am overbuying it. I'm buying at a higher rate. I'm saying I will spend up to 3,700 on this to get this. But it's going to fill me at the best price possible to get all of my units filled. So I'm entering there because of the volume indicators, and sure enough, boom, 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 boom. It posted tons of volume indicators and went up. As this thing's slowing down, and as maybe I'm seeing these wicks on tops, that's a signal. As these are occurring, I'm getting leery, and I'm going to sell as it's still moving up here before it slows down, before it turns around on me. But this is a great way of identifying when that leg is coming, these triangle patterns. And it happens over and over and over. A lot of people say this, and I've seen it where it behaves properly, and then I've seen it where it doesn't behave properly. But a lot of people say that the height of the next move will be according to the flagpole of the first move. So the flagpole is from right here. Here, I'll get a yellow one. I think that'll help a little more. The flagpole is going to be from right here to right there. It's basically from the bottom of the move to the height of the pattern. And so what I did is I copied this flagpole and I pasted it right here. And wouldn't you know it, literally, it was literally that height, almost exactly. Another reason why I entered right here is because again, a symphony of things. I'm looking here, and the RSI is still really good. We've got room to run, and run it did. Up here, the RSI was tapped out, and ding, ding, ding. Here's a bonus round. If you look right there, I'm doing a horrible job of drawing the line, but right there, oh, perfect, at 80. Look, there's 1, 2, 3, 4, 5, and finally 6 pullbacks right on 80. So if you saw all 6 of these bad boys where it pulled back dramatically at 80, and you're scalping and you enter this wave and you get to here and you see that RSI approaching 80 and you don't get out of your scalp, then you're crazy because you knew it was coming. It's called redundant or historical RSI. And that happens on the other end of the spectrum too. So on pullbacks, when you're timing your entry, a lot of times I time that based off the RSI too. So when it pulls back, a lot of times it will go down, and let's just say hypothetically, and I don't see it here, but I've seen it on tons of charts before. But say this is the 40 line. A lot of times it will go down, touch 40, and then the price will rocket back up. It'll come back over here, touch 40, and then the price will rocket back up. So then it helps you time your entry on your waves because of that redundant RSI where you know that's the lowest point the RSI is going to go. Now sometimes every rules may be broken and the RSI breaks these patterns, but the more and more often it happens in your time frame, the stronger you can rely on it, and it's a good rule of thumb, period. So what I'm saying is, if I sold here because I knew that the RSI never went above 80 the past 6 times, and that was the highest number for the RSI, even if it goes up a little bit and the RSI goes to 100, who cares? You still executed it, you were safe, you followed your strategy, and you did the right thing and you made money. Okay? All right, next. One thing I want to say about this too, if you look down here, this TTM squeeze is still in the middle of a bullish move. So it's very possible that even with this pullback, and I think I see a tiny bit of a green candle there. So it's even possible with this pullback that it's still going to go up here. I love stuff like that because what I'll do is I'll sell right there. And then with quick fingers, I'll be ready for another entry right there. Not only because the TTM squeeze is there, but I've also seen the RSI go down and relax into chillax country. And I'll try to get another wave right there. Alright, next slide. These are more examples of triangle trading. So again, right there, it can break out there. Or it can break out there and dump bullish. Right up here, it can go there and go there. Now, this one is very weak. This one really, I would love for it to go up, boom, come back down, up, boom, come back down, up, down, up, down. But it is trying to form one there, but it's a very weak version of it. So the weakness of it concerns me because it's not as reliable that it's going to do. Sorry about that. Hold up. There we go. It's not as reliable that it's going to do anything here. So you got to kind of be careful. What you want to see is where they're really strong formed up. The more touches that the pattern makes on your triangle, the more you can rely that there's going to be a breakout here. And knowing whether that breakout is bullish or bearish has everything to do with volume. I would say RSI too, and just watching the coin. One thing that I'll say about this is it's a sloppy pattern altogether, and this big long red wick right here, for me, is a warning sign. Another warning sign for me right here, and I'll use my faithful pen, are these smaller candle bodies here, meaning that it couldn't do much with the price period there. Another thing that I'm looking at is the volume is slowly kind of diminishing here. If the volume gets any lower and starts putting in lower candles here, it probably can't support the price where it's at, and before it even finishes this triangle, it's probably just going to fall off. Alright, next. And we are almost done with this presentation. We just got a couple more slides of tech data. Alright, next, cup and handles. This is a pattern I scalp all the time. So basically what you're waiting for it to do is you're waiting for, this is kind of like the neckline, you're waiting for this handle to form out over here and fill up. And as soon as the price breaks this neckline, that would be my entry. Again, you would review the RSI and make sure that's okay. And you would review and see what you would want to see is see this big volume over here. You would want to see big volume over here. And that's my that's all my volume bars. So you would want to see that when it got close to here, so you know this is going to be a really nice breakout. Again, these are the same patterns you use in swing trading and all kinds of other trading. Same patterns, we use them in scalping. Alright, another pattern that I use all the time is the triple bottom. It sounds kind of funny, but it can have prosperous rewards. So triple bottom is basically like a W with an extra V on the end of it. And so basically this would go down here, pop back up. If it breaks this neckline and it goes over, this is my entry right here. But it would have to be an entry that's confirmed with nice strong volume, green volume, meaning that this is really a trend reversal. Some of these patterns I'm showing you, like the triple bottom, are what's called trend reversal patterns. That means it's been in a bearish dip, and you see it over here. It's been super bearish, and it's been going down. And this is a trend reversal, meaning this should be a trend reversal and make it go bullish, okay? An inverted head and shoulders is also another trend reversal pattern. Or normal head and shoulders is also a trend reversal. Next. Here's a double bottom, which is very similar to a triple bottom. For me, my entry level would be right around here when the price breaks with volume. Now, one of the things that I see around here is I don't see a lot of encouraging volume. So I probably wouldn't take an entry there. Because even though it broke the neckline, like we said before, technicals are always good until they're not. And a lot of people say the target for this is the height of the W or the V all the way to the bottom of these. So that would be this pole right here, and I just copied and pasted it up here. So technically speaking, this should eventually go up, meander, or explode up to at least here, which is where you would want to sell. But my deal is that this right here is not exciting. Does not look like a breakout. So you have to weigh that, okay? Next, inverted head and shoulders. This is another trend reversal pattern, and you can see it right here. This is kind of like the head. This is kind of like the shoulders. And so if this coin is, say this coin's been in a bearish slide, all of a sudden the head and shoulders, it should reverse and begin some type of a bullish up move. So sometimes I scalp these, but most of the time, you know, these are on the overall bigger trends on the 1 day, 1 hour charts. I'm trying to look and see, you know, what the coin's doing. Another thing I wanted to say is I'm not trying to pick the bottom on any of these coins. I am not in the business of looking at coins on a 1 day chart and saying, oh, I put in a head and shoulders. It's gonna flip around and turn north here. I'm gonna buy tons right here and try to scalp it for the next 30 minutes. No thanks. What I'm trying to do is after that head and shoulders comes in and it turns north and it goes bullish and it goes for 2 hours bullish, and I think this is going to be a couple days bullish run, then I start scalping it. I'm not down here where the rubber meets the road. Like, I hope this pattern pulls out. I hope it proves true. I scalp stuff that are confirmed bullish. XLM and XRP are great examples over the past couple days. They've just been running for 3 or 4 days. Do you think I'm going to scalp them? Absolutely, I'm going to scalp them. Do you think I'm going to scalp coins that are trading sideways over XLM and XRP? No way. Do you think I'm going to try to, you know, scalp coins that are kind of meandering like this one is? No way. I'm scalping coins that are already confirmed bullish. I'm not trying to predict whether they're going to go bullish. I'm scalping them because they're already bullish. So that's what I do. And that bullish doesn't have to be like a 3-day spree for me to jump in on it. It can be a 2-hour spree where they got good news and it's going up, and this is what's going to happen over the next 24 hours. That's what I'm doing. So, but these inverted head and shoulders, these are important. So while you're in the trades, you see stuff like this and you know, uh-oh, it's time to get out. Or, uh-oh, it's going to turn bullish here. Maybe it did like a 10-minute pullback. Well, then you get your head and shoulders and you know, okay, the good stuff's coming. Okay, I threw this slide in, and it's called EMA bounces. This is another thing that me and really a lot of guys in Allegiant do. And you can see this 200 EMA as we change the time frame from 1 hour, 15 minutes, 1 day, whatever it is, and we look for EMA bounces. We look for something to hold true. Every time this coin goes down to the 200, it bounces off of it. Here, it didn't even approach the 200. Here, it did break out of that Bollinger Band, but it didn't break the 200. Here, it kind of broke the 200, but it kept itself inside. It goes up. Here, it doesn't even get close to the 200. So it's statistically and consistently staying inside the 200. So for me, you know, anytime it comes close to touching the 200, as long as I see the volume coming in strong, I might do a little play where I buy it at or near the 200. And it go up and then sell it up here. So 200 bounces, 913 EMAs. I also scalp 913 EMA crosses. And if you look right here, you can see that glorious golden EMA on top. That's a bullish indicator. The 13 is crossing above the 9. That's bullish. And I scalp that all the time on the bigger time frames, especially because it holds a lot more weight. And I use those EMAs and Bollinger Bands and all of that to work together. Alright, let's talk about a couple things I won't scalp. I will not scalp falling knife pattern. And falling knife patterns are just a great way to say this thing's just imploding. But a lot of times along the way down, you'll have these little bull traps where it's like, a lot of people, like over here, we see something, and this could be some type of fib level or something, but maybe this is a support level. So when it got here, some people were obviously buying it up, saying, oh, this is it, it's not going to fall anymore, and they wanted to be on that bounce. Well, I don't play bounces like that, unless I know that this for sure is the bottom, because a lot of times on falling knife patterns with something's imploding, there are a lot of little bull traps along the way, and you're risking a 10% move for what could be a 60% loss if you cannot get yourself filled at the top of this mountain and that thing just starts panic selling again. So I don't scalp falling knife. ABCD corrections, again, coins that are correcting, I do not scalp the bull traps. Here's 3 bull traps right here of coins that are correcting. PRS, again, you cannot use it as a Bible. Right here, PRS is telling you to enter, and it's telling you to sell right about there. Ooh, I don't even, no, that's a loss right there. So PRS told you to enter right here, and it told you to sold right there. That's why you can't use it as a Bible. Your rules have to take precedent, and my rule says that when I see a coin that's generally downtrending and just you know, whatever it's doing, ABCD or falling knife or whatever, I am not going to go after these little tiny spikes because I know the general trend is down. Just don't do it. Pick a coin when it's on this side of the mountain and it's just going up, and then you know it might pull back, but overall it's going up. Okay, and then you got to know your pattern. So when you see this double top up here, you know, this bad boy's reversing, and you get out. Alright, another thing I won't do is choppy charts. This is a good example of choppy chart. There's a big difference between charts or coins that are trading in channels and choppy charts. I don't like this chart because most of the candles in here, it's like up, down, up, down, up, down, up, down, up, down, up, down. And there's not enough price movement. It's not operating in waves. It's just a big choppy mess with tons of massive long wicks that should be alarming. These are big, long red wicks that should be alarming on top and bottom. And this type of choppiness, for me as a scalper, I just run. Speaking of running, run! I love this meme. This is awesome. But another thing that I won't scalp and obviously I run from is reversal patterns. So you got to know the double top, you got to know the head and shoulders, you got to know all the reversal patterns. This is actually the Ripple reversal pattern that I was talking about the other night. I posted it in main chat, and it's on a 30-minute, so it holds pretty good weight, you know. This is going to actually bring a significant reversal. This was at the end of a multi-day run for Ripple. It had been doing really good, and a lot of people have made money on it. But as soon as I saw this, that's the face I made. And I got out of my scalp on it, and I sold out. And sure enough, and I posted it in May, and I tried to let people know, warn a brother, and I tried to let people know, and as soon as I did, sure enough, it took a multi-hour, and it could still be on it, but basically it took a multi-hour dump, and it's been dumping ever since. Another thing that I would recommend is get your candlestick cheat sheet. We have it in the pinned messages on Allegiant. Learn these and be really good at them, and these can help. Because you got to be able to recognize these on the fly. You got to know when a bearish spinning top comes in. This might be the end of this little wave. I may need to sell my scalp. A gravestone doji may need to sell. Bearish engulfish. This could spell trouble. I might need to sell here. Or you look for things like 3 black crows. 3 black crows for me as a scalper is like the universal signal to cash out, get out. Because that usually is bad news. If you get 3 black crows, one right after another, it usually means that coin's going down, and it's also a signal to all other traders to sell your junk. And then you have to know the positive, happy ones, the bullish ones, and what they mean and why they're good. Next. And the bullish ones help you understand when a bearish trend might be over or, you know, something might be finding support. So these are important. Finding the scalp. Let's identify the trading size. The best way to identify your trade size is watch the risk management class in the Allegiant library taught by Cole, one of my friends. His name's Gang Affiliated on Discord, and he preaches the gospel of risk management, and it's a great gospel, and it saves a lot of people money. So I think what he says in that class is never use more than 3 to 5% of your account in any trade. And I'll go on further to break down kind of how I do it. First of all, in my trades, I use, let me go to red. So I use 30% of my account in my scalp account, which is 0.3. And of that, I use about 1/30th. Sorry, I can't draw a 30th. Here you go. That's as best as I can do. 1/30th to, at the most, 1/10 of that. So basically, I'm trading with 0.01, at the most 0.03. And that's just me personal. You should take the risk management class and figure out what's good for you. The rest of my money, besides my 0.03 that I'm using for scalping, I've got on a cold storage device. As I make more money in scalps, say I get up to 0.4, what I'll do is I'll transfer off 0.1 to my Trezor. So that'll go bye-bye. And I'll make sure I don't have more than 0.4 in my account. So you've got to do your proper risk management and kind of assess it. And use an amount to where you're still making money, but you're not risking the farm. Next. One thing that I said earlier that I wanted to highlight one more time is one thing about identifying your scalp size is you got to know where you're trading as far as the general picture of the coin and what it's doing. If you just look at 1 minute charts, you could very well be scalping right up here on the verge of a massive pullback. When the daily RSI is up here at 95 and it's about to just drop on you. And if you're macro scalping, this is catastrophic. So not only do you look at the 1 minute chart, but you also got to look at the 1 day chart and you got to say, oh my gosh, on the 1 day chart, the RSI is way overheated. It's got to pull back here soon. And so maybe you don't want to scalp it up here. Maybe you scalped it right here, from here to here. But as soon as that RSI gets way overheated on the 1 day, you stop scalping it because you know that big dump's coming. So that's part of picking your size for what you're going to do. If I scalp up here, if I choose to do it, I'm going to use a lot smaller size than if I scalp down here. Next, your TA can be correct and you can still lose money because the coin does not achieve the target price long enough to allow you to exit. I said that earlier, where you buy 10 coins, you're hoping the price goes up to here, it does, but there's only 3 coins sold up here, so you sold one here, one here, one here, one here, and you actually lose money because you needed to achieve this to make money, and you needed to achieve this to break even, and you sold all these below your break even spot, so now you lose money. So that's another thing about choosing your sizing. It has to be the right size. Your sizing is critical and it has to be dynamic based on the coin and what's happening in the coin. Review the average book and review the average unit sale in order to find ideal scalping size for your coin. So what does that mean? Well, look. So on Bittrex, there's obviously the tape, and you can look at it, the orders that are coming through. And what I'm looking at here is the buys, and I see a 97, I see 253 9 units, I see 158. So what I'm going to do is, I told you guys before, my size that I usually scalp with is 0.03 or 0.01 to 0.03. If that buys me 1,000 units, I'm not going to use that much, because I want something that falls inside of these averages. Now we see this big boy that came through for 2,000 units, but that's not the average. And not only that, but I'm not looking through one page. I'm going to look through like 5 pages and see what people are normally doing. In this scenario, it's good to blend in, because what you want to do is you don't want to purchase a big amount like 2,600 that takes like 8, 9, or 10 average orders to fill. Because here's the problem. If that price goes up to your target and you're selling 2,000, but it doesn't last at that target and you only sell half of them at that price, and the rest of them you have to sell way down here, you're going to lose a lot of money. Especially, look, you've anteed up. Sorry, you've anteed up Let me get my pen working. You've anteed up 0.49 Bitcoin. So if you sell those up lower than the break-even amount because it didn't maintain that price long enough for you to exit with that volume, then you've lost serious money. If you only sell half at your target, then the 0.25 Bitcoin that you still have in this coin is going to take a serious hit, and it's going to be painful. So that's why making sure your size is in the average is good. Now, if the average is worth more Bitcoin than my risk management tells me to, and my rule is 0.03, I won't go over it, I am not increasing this to meet it. It's always okay to be less than the average of what people are buying. It's never okay to be more than that. The tape will also show what's being filled from the order book. Remember when we discussed big buy walls that are like that? They're monsters. And then the sell walls like this. Well, when that sell wall meets the buy wall, does this buy wall disappear and turn into a tiny sliver, or do you see all these buys coming through at that price with tons of units, and you were like, "Wow, that is buyer support there." That's a great way to find that out. Is right here in the tape of the coin. All right. Next, your scalp has to be dynamic. And should be based on a variety of things, including but not limited to the average order size on tape, which we just talked about, proper risk management, your own rules, market conditions, Bitcoin movement. Do you think Bitcoin's about to go on a rampage? Well, if it is, I'm not going to use as much as I normally would use. Is it trading sideways? It has been for a day? Then cool, I'm going to bust out the stops and use a little more than I normally use. D, the overall trend of the coin and where your trade plays into that. If it's way overbought and the RSI is high on a one day, I am not going to use a ton of money because I know at any time this coin could post a 30% pullback. And if I get trapped in that somehow, I don't want it to happen with my big pile of money. Another great way to find the size is right down here at the bottom of the bid book. You can see how much money is on the line, how much people said, I want to spend my money on this coin. Same thing on the sell side. This is how many people are trying to sell their coin. If this thing starts blowing up and starts doubling and gets higher than the sell side, a lot of times you can detect news or things that are happening in real time with the coin by that. But a lot of times you can see buyer support being generated here on the bid side. Now, not all of those people are telling the truth. Remember before where we said that, talked about bid walls that were ghost walls and disappeared. But it's interesting to watch because you at least are able to see how many bulls are watching this coin. Another thing is when the price starts moving up, a lot of times more bulls will jump on. So watching this price change as the price is moving up substantially, or not price change, but watching this amount change as the price moves up substantially is very fascinating because you realize how many bulls are on the fence that want a piece of this action, want a piece of this pie, and are trying to throw their money in really fast. So that is interesting, and it's a good signal that this coin might have good bullish movement tonight, and that bulls are counting on it, and they want it to win, and they're ready to throw their money behind it. So that affects your sizing as well. A good rule to remember is if you're nervous about your trade, you're using too much money and don't belong in the trade. True story. If you go to sleep, if you're a swing trader and you go to sleep and you're constantly waking up throughout the night checking that coin and the price, then you probably use too big of an amount. And if you're a scalper and you enter that trade and you're screaming at your mom to bring you the meatloaf, Mom, the meatloaf, and you're freaking out and, you're just a nervous wreck, you probably entered too much into that scalp. You probably need to dial it down a little bit and get an amount to where if you lose it, you're not going to be a miserable wreck, and, go from there. All right, we're getting close to the end here of this presentation. One of the final things, and one of the most important things we need to talk about is identifying the exit of your scalp, okay? You got to know when to hold them. You got to know when to fold them. Yeah, it's true. The best thing I could tell you as a scalper is to be paranoid. Review the average wave height so you know about how far you think the next one could go. Study harmonics in trading. Study triple drives in trading. Study key fib levels. You have to have your Fibonacci levels up. If I have my Fibonacci drawn up and I know this coin's going up and it's hitting this massive fib level, I'm selling right there. Especially if that coincides with a massive sell wall. Especially if that coincides with a massive site number like 20 or whatever. I'm going to sell right there. So you have to study all of that, and that comes together as a picture to help you determine where you're getting out. But the main thing is you're getting out at the top of the wave. Wherever that wave is, you're getting out on that wave. Study psychological levels. Study sell walls. You're getting out before all of these things. The exit is the most important. This is so true. Most important part of the scalp. The best exit strategy is don't be greedy. Exit in profit. If you think something will continue to run, cool, scale out. I don't scale out. I just buy and buy out on my scalps because it's a little too hard to scale out. Sticking to a strict exit strategy is key to preserving your profits and making your little wins add up. Little wins add up, and it makes your account bigger, so you can still take the same percentage of your account and be smart with your risk management and actually make more money that way. Then, next, let's talk about exiting. So, this is a good one to look at because this was my favorite scalp setup lately. XRP is just going up here. It's beautiful, and they're beautiful little waves that you can capitalize off. These waves, these pullbacks are your friends if you know how to play it. So, let's say hypothetically this gets up here. Well, one of the things I'm watching, and I said this before, but this wave went all the way down here. This wave got a little bit shorter. This wave got substantially shorter, and I am just worried in general about this wave altogether. I'm worried about this wave, so I probably wouldn't scalp this wave because I just don't like things about it already. Look how big these volume candles were on these runs. Look how short these bad boys are. They are not the same. Not the same sheriff in town on these guys. So I'm worried about scalping this wave altogether. I probably wouldn't do it. But another thing to look at is, ta-da, the order book. If there is a massive sell wall right here, I am going to, and say I've been a scalp from right here, and we'll just say that corresponded right there. So I've been in a scalp since this price right here, and slowly the prices ran up to here. I am getting out right about now. In fact, I am definitely going to get out by here. I am not going to stick around to see if XRP can climb a 180 Bitcoin wall. There's no way in hell. Now look, this is another advantage I have on a longer. They're going to buy at a super low price and just hold out. But what if it doesn't conquer this 200 or look, that's insane, 420 Bitcoin wall? What if it doesn't conquer that? What if it gets smacked down and it just races down? Well, I still made profit off of all these little waves, and I didn't have to worry about that downturn. I didn't have to worry about it, and I didn't take loss. But as a scalper, what I will do is I will sit here, since this coin's already delivered for me, and say the bulls come out of nowhere. Say all of a sudden, the buy wall builds up and it's huge and it conquers this and it climbs up and boom. What I will do is I will buy this coin again right around here, literally on the wall. So if this wall ends at 20, I will buy it at 19.9. I'll buy it at 19.9 because I know if it's already climbed up all this, 10 Bitcoin's not going to stop it. Because another thing I'm doing is I'm slicing the pie as it relates to the order book. So once you get up to here and it's conquered all of this in the order book, and it's dropped it down to here, and you've got this massive buy wall, you see that it's only got 50 Bitcoin to go from 20 all the way up to 25. I can't see that far, but what I'm saying is that looks like a risk I want to take. It's got very little cells in the way of it from running a ton of distance. Whereas this is not a risk I want to take. I don't want to enter a scalp here. I want to exit a scalp right here because it's got a ton of cells. In fact, 420 Bitcoins to conquer between now and then to scale that cliff, get up here. Once it scales that cliff and gets up here, heck yeah, I'm hopping in, I'm along for the ride, and we're going for another wave. Okay? So exit, you gotta have one. A lot of my exits, I draw my fib levels, so I'll have my fibs drawn out, and I would wager that this is probably a fib level somewhere up here for this coin, and it's about running into a psych level of 2 or 20 or 20,000 real soon. It's at 19,469, so it's running into a psych level up here eventually. So again, I'm getting out before all this stuff happens, before the fib level, before it has to fight these sell walls. Once it gets to 20, I buy in. You know, we have a happy New Year's Eve party or happy 20 party. It conquered 20 and everybody's excited. Tons of bulls jump on and it just rages because it's got very little sells in the way. And I'm going to hop on that and get another big scalp. So I calculate my exits based on the wave heights. I calculate them based on usually as these wave moves. Again, I'm intra-wave, if that's even a term. I'm buying at the beginning of the wave, selling at the end. So as this goes up, I can see these candles getting shorter and shorter. And I can see the wicks on both sides of them getting longer and longer. Look, this is a tiny one. If you didn't sell on this little midget candle, after all this profit, you're just a greed monster. But that's what I'm looking for, smaller candles. And then when I know it's time to stop scalping the coin, period, is when the waves are getting smaller and smaller. And usually, once those waves get smaller and smaller, it eventually puts in a head and shoulders or sometimes a bearish reversal pattern, and then boom, it takes a massive dump. This slide snuck in there, but it's another look at my beautiful ripple pattern, and I absolutely love it. Another thing that I'm looking at for my exits is I do use TTM squeeze. So right here, I can see already that TTM squeeze says, hey, this is the end of this bullish push. So chances are we're going to have a substantial drawback here. Right here, TTM squeeze said you're on the verge of a turnaround. This is the height of this bullish push. See, the height of the bullish push. It's going to be a drawback, and then it went straight bearish right here, right there. And then it turned around for another push. So the TTM squeeze, obviously it's not right 1,000% of the times, but it's good. But another thing, the main thing that I'm using to target my exits is the RSI. Once the RSI gets up here, and if there's any historical RSI, I always follow historical RSI. Meaning if it turns around every time it hits 77, I'm out of there. I'm going to sell actually right here. So I'm actually going to sell right there, way before it hits that historical RSI. Honestly, anytime it gets over 80, they track it at 70, I think, and 30. But anytime the RSI gets between 70 and 80, which in this case would have been from here to here, I'm already getting out or I'm out. Because I don't want to be involved in the turn. I don't want to be involved in the turn. Because it's hard to sell on this side of the wave. It's hard. Because usually what happens is it took 30 little green candles to go up, and it only takes 3 or 4 to go down. Meaning the price action goes down a lot faster than it went up. Which means it's very easy to lose your money. Especially if you missed your entry and don't get in until here or here. And at some point, you have to see this RSI creeping up and say, all right, I just missed it. And then what you do is you don't like go home and cry and pack up your tools. No, you just wait for the next pullback and just grab this bottom of this wave. As soon as this RSI starts leveling out and turning back northward, boom, I buy right there, follow it up, and I'm golden. All right? So, this is really the end of this presentation. I've just got a little more to tell you. 1, scalping review summary. The best way to become proficient is through paper trading. Every new scalper and really every new trader should be doing that. Today, we've reviewed trading tips, scalping define, scalping psychology, scalping setups, scalping death traps, scalping entry, scalping size, and scalping exits. So I hope this has been absolutely awesome. Questions and answers. You can always ask me questions on Twitter. You can always ask me questions in Discord. I'm in Allegiant Trading in Discord, and there's a link to it in my Twitter profile, or just come on Twitter. Find me at Crypto Spectre and ask me any question you want to about scalping. I'd love to help you. It's been awesome and changed my life. And then I have this last thing that I wanted to tell you guys. What are scalpers? Who are scalpers? I'm a scalper. I spend hours on the trail and lifetimes waiting to strike. I'll buy and I'll sell before you blink. I stay up studying harder, charting more, and lurking longer. Scalping is no country for novices. You must be an expert to scalper. There's simply no meat for beggars and no fruit on the vine of ignorance. Again, there's no fruit on the vine of ignorance. And that's in trading in general. Just broken hearts and Bittrex accounts. I'm a scalper living in the land of plenty for those who hold the real currency, information. So study harder, stay hungry, and strike quickly. And you might be a great scalper. And I believe every one of you can be if you really apply yourself. Today's video, obviously this training is free. I just ask you to follow me at Crypto Spectre, and also give Allegiant Trades a follow on Twitter at Allegiant Trades. My ask, I'll post this on my Twitter. My ask is that you just retweet this if you enjoyed it and you want to see more videos like this from myself and Allegiant Trading. So sharing is caring, and I really appreciate your time. I appreciate everybody tuning in and watching this video, and I appreciate and love trading with all of you guys and working with you guys. It's already been a super prosperous 2017, and now we're in 2018, and it's going to be a killer year. Let's keep working together and growing and making each other stronger. This is going to be awesome. Thank you so much for spending this time with me today, and I really hope you learned something. If you did, I would absolutely love for you to reach out on Twitter and let me know. It really encourages me to make these videos in the future. Thank you so much, and good luck scalping. Thank you.